neutral.
I think they're also, pretty decisively in, a pivot right now toward lower interest rates. So I don't think that it would really be as controversial if they were to, cut interest rates sometime around the election, if that's obviously so pre-calibrated at this point.
I'd agree with that.
All right,
they can't afford to pass.
Time to put you on the spot with my unfair questions, but how many cuts this year from the Fed did you say?
The Fed thinks 3, the market thinks 6, and I think it's between 3 and 6. It's at least 3.
That's a safe
and I'd
guess.
say 4 or 5.
So S&P 500 year-end target.
I would say, so a modest return of 5 to 7% for the S&P 500.
All right, so 5,000
5,000, that's right.
Okay, all right.
That sounds like a good number.
I'll settle for that.
Around.
Yeah.
5%.
Okay.
Thanks. Good to see you. Ron Sanchez, the Chief Investment Officer at Fiduciary Trust International, coming in from the islands, Long Island.
Best to the island of Manhattan.
Unlike you, you're a real island hopper. Anyway, the S&P 500 right now, 31 points lower. That's down 0.7%, 47.34. The Dow Jones Industrial Average right now 75 points lower. That's down 0.2%. We're at 37,287. And the NASDAQ 100 down 211 points. That's a drop of 1.25%. As for those yields, once again, it bears repeating the more policy reactive 2-year after the retail sales data. The much stronger than expected retail sales data this morning, 14 basis points higher. That's right now at 436. The 10-year is up 6 basis points. That is at 412. And that brings us now to 10:33 on Wall Street. Let's get an update on news from around the world. And for that, we head to the Bloomberg 99.1 newsroom in Washington. And here's Amy Morris. Hi, Amy.
All right. Thank you, John. Good morning. The U.S. plans to put the Houthi militant group back on its global terrorism list today. Sources tell the Washington Post that decision is part of a pressure campaign against the group. The Houthis have fired dozens of missiles and drones at commercial ships transiting the Red Sea since Israel declared war against Hamas in Gaza. Meanwhile, the United States does not expect its strikes on Yemen's Houthi rebels to eliminate the threat posed by the group in the Red Sea. That's according to White House National Security Advisor Jake Sullivan.
We do see a pathway to a shift in the military campaign in Gaza, a reduction in tensions and the exchange of fire along Israel's northern border, a reduction in the risk of escalation in other parts of the region, and we'll have to continue to deal with the Houthi threat.
White House National Security Advisor Jake Sullivan speaking at the World Economic Forum in Davos. A temporary spending bill to avoid a government shutdown this weekend has passed its first hurdle. The Senate voted to advance the measure that will fund some federal agencies through March 1st and others through March 8th. Again, this has just passed its first hurdle in the Senate. Since 1991, overall cancer deaths have fallen by 1/3. This latest American Cancer Society Chief Science Officer, Dr. William Dehood, says rising colon cancer rates have actually shifted mortality patterns in adults younger than 50 years old.
We went back to 1995. Colorectal cancer was the 4th leading cause of death in both men and women. And now in women, it's the number 2 leading cause after breast cancer and the number 1 leading cause of cancer deaths in men under the age of 50.
Now, the report shows that breast cancer rates are rising. Colorectal cancer has become the number 1 cause of death among men under 50. Uterine cancer is now the only cancer where survival has decreased. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
$10:40 on Wall Street. I'm Nathan Hager, and this update's brought to you by IBKR. Investment advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interests at ibkr.com/RIA. S&P 500 right now is down 28 points or 0.6%. The Dow Jones Industrial Average is lower by 49 points or 0.1%. The NASDAQ 100 down 191 points or 1.1%. 10-year Treasury yield up 5 basis points to 4.11%. All this following stronger than expected retail sales data. Lots of discussion in this market about the path for rate cuts, whether the market's gotten too ahead of itself when it comes to the Fed. We talked about it at the World Economic Forum in Davos with the CEO of Standard Chartered, Bill Winters.
I think the market might be a little bit ahead of itself in terms of rate cuts this year. I have no doubt that we'll get to rate cuts at some point. I suspect it'll be a little bit later in the year, so we have this debate within Standard Chartered all the time. And we're positioned in terms of our from a treasury perspective, we're partially hedged, but we're okay.
Standard Chartered CEO Bill Winters with us from Davos. Looking at commodities, NYMEX crude down 1%. 71.65 for a barrel of West Texas Intermediate. COMEX gold is down 0.75%, $2,014.60 per ounce. The euro weaker against the dollar at 1.0863. The yen is at 148.35. We continue to watch Spirit Airlines. The losses continue, down another 24% after yesterday's 47% decline, all after a federal judge blocked JetBlue's $3.8 billion acquisition of the low-budget airline. Boeing is moving higher right now, up 2 1/3%. Operators of the grounded 737 MAX 9 have finished inspections on 40 of those planes. It is a key step to getting that grounded model back in the air. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Molly Smith.
All right, thanks a lot, Nate. Appreciate it. Let's move on to our next guest. Central bankers, of course, as you just heard Nate there, they continue their forceful pushback, I would say, against market bets for interest rate cuts. That's weighing on risk assets today. So what's an investor to do? Joining us now, Robert Schein, Managing Director, Partner at Blanky Schein Wealth Management. How does an investor play this back and forth? Fed going to cut March, now it's later, fewer cuts maybe. How do you view all this?
Well, good morning, John and Molly. And I think if we go back a month ago when I was in the Bloomberg radio studios, I did say that, the markets were anticipating and asking for, in 2024, a rate cut. In fact, obviously you saw equity markets, risk assets price that in super aggressively. We were in the camp of, as I said then, and I still believe that it's going to be higher for longer, and the Fed Reserve is going to have to walk that tightrope, simply because if you look at the sort of trajectory of inflation through history, you get 2 humps of inflation, and the Fed can't pull down sort of the interest rate to reignite some of the inflationary pressures. They have to ensure that inflation is anchored before they go ahead. I mean, about 78% of the time, historically speaking, inflation comes in 2 waves. So, what the Fed basically has done now is that for 2024, it's not a no on rate hikes, it's a no for right now.
How much do you think of the disinflation we've seen that the Fed can really take credit for? This is something I've been wondering, and I feel like so much of it has just been like the supply side normalizing, from those big COVID disruptions and a lot of those supply chains getting back in order. Do you really think, though, Rob, that the Fed can take credit for a lot of what we've seen?
Yeah, I think we're in a territory, including the Fed, that no one has ever seen before. So, retail is working through that. Services are working through that. Federal Reserve, businesses are working through that. One thing's good is the supply chain got tighter and then it got sort of a lot more efficient, if you will. And I think a lot of businesses became a lot more efficient, even moving forward. So that's going to be leading to greater profitability for a lot of businesses that learned through COVID. But if you look at the shift in consumption, and 2/3 of the economy is consumption, it's basically the services sector that's still seeing that spike up. up. Look at airline prices. Look at all the inflationary prices where people are like shifting their spending. We just got retail sales, goods. You know, American consumer will always find a way, whether it's the credit card or whether it's the savings that they had saved up to you know, make certain that Christmas is still Christmas at home. But it's going to take some time to see. We're going to see a lot more pressure build on the consumer, but the shift in spending is quite clear. It's still services for this year.
Okay, we can definitely say there's something of a pivot, the degree to which you can argue about, and we're definitely headed toward that 2%, although with maybe fits and starts, so a disinflationary environment or outright deflation in some sectors. I ask this of all our equity guests. What does that mean for earnings, especially the top line sales growth?
Earnings, if you look at, you know, again, that's going to be at the forefront. We just had the two biggest points, you know, year to date as it relates to the CPI information as well as job market. It's not exactly going in the right direction in terms of as much movement as the Fed needs to see. But the earnings is on the forefront. And corporations, if you look at tech 2 years ago, tech literally started laying off in anticipation of a recession. We're looking at banks right now. At the end of last year, they started laying off. So it's basically a rolling sector recession, you know, pick your company, but a lot of companies are basically being a lot more conservative. Now, that jobs number is basically the, you know, not going in the direction that the Fed needs it as quickly as at least the markets would like it. So interest rates could come down quicker.
So a rolling sector recession, does that mean we're in an actual economic recession or heading toward one?
I don't know if that'll actually transpire. If you look at the last 2 years, different sectors have had recessions at different times. That's why I think this time is different from a quote unquote recession standpoint. I know we've been waiting for about a year and a half, holding our breath for the official data to come out. But if you look at the different sectors and the performance of the different sectors, outperformance in some and underperformance in others, I think sectors, that's where you have to sort of be tactical in your performance of your asset allocation as you look into the market for 2024. The sectors that perform the best on a relative basis, let's say technology, are still going to perform well this year, but relatively other sectors will sort of come back. Let's call it healthcare, energy. I think those are times to start looking at overweighting those sectors for 2024.
Okay, so I put all that into the blender, turn it on high. What do I come up with? Where am I going to put my money?
Again, the 60-40 sort of asset allocation is where we're at. We like about a 10% allocation within that 40 within alternative investments. But I really like energy for the first 6 months. I think obviously the geopolitical tensions that we're seeing, earnings growth in that sector alone is up 40% in the last 4 years. And then you also have buybacks. I mean, they're dividend rich right now. And so where they're going to basically have that free cash flow is how they're going to allocate that. And we believe there's a lot of value there, plus a lot of M&A activity that we saw is going to be accretive. So we like the energy sector moving forward. And then healthcare. Healthcare, again, just like energy, is going to present a lot of value. Plus dividends, you get paid while you wait.
So Robert, just in our last 30 seconds or so here, just have to confirm, you're coming to us from Palm Desert, California today, is that right? Okay. Tell me.
Is that a TV screen or your window in the background?
That's
Come on, be honest.
Screen. But if you look right through us, we've got basically a Palm Desert Chamber of Commerce, you know, snow-capped mountains out here. It's 70 degrees, so come on out.
And also nearby is a beautiful tennis center, which I got to ask, are you going to be at Indian Wells in March?
We love the Indian Wells PNB, you know, tennis event. It's a first-class event. And it's international and it's growing every year. So it's a perfect time of year.
Yeah, that's big on my list for next year. This year, going to the Miami Open, though.
It always comes back to tennis for you.
It has to. We haven't even talked about the Australian Open yet. It's really just a huge oversight on our part. We will be getting that to you, everyone. Don't worry.
Bob, thanks a lot. Appreciate it. Robert Shine, Managing Director and Partner at Blanky Shine Wealth Management. Thanks for putting up with us. Thanks for putting up with Molly, actually.
Really, just John.
S&P 500 down 30 points. That's a decline of 0.6%. 4735 in the index. The Dow Jones Industrial Average down 52 points. That's a decline of 0.1% right now. And The tech-heavy NASDAQ 100, 189 points lower. That is down right now 1.1%. The two-year yield 13 basis points higher at 435. I'm John Tucker along with Molly Smith. You're listening to Bloomberg Markets. And right now, time for company news. And for that, we say hello to Bloomberg's Steve Rappaport.
Hello, John. Retail sales posted the largest increase in 3 months in December, capping a solid holiday season. Bloomberg's Vinny Del Giudice reports.
Gains were across the board, including online sales as well as general merchandise stores. Auto sales also advanced. Research firm Capital Economics says there's no sign Americans are buckling, even with high interest rates, even with dwindling sales. Meantime, December industrial production rose just 0.1%, closing out a lackluster annual performance for U.S. manufacturers. Vinny Del Giudice, Bloomberg Radio.
Tesla is cutting prices again on select models. The latest on that from Bloomberg's Craig Trudell.
Yeah, so Tesla slashed prices of the Model Y in Europe, and there are a couple of reasons that this is really interesting. The fact that the company makes the Model Y in Germany and is taking that plant down for a couple of weeks, beginning the week of January 29th. So they already are sort of, headed for this, position of maybe being a little bit short on Model Ys, or so you would think if they're taking production down for some time.
Bloomberg's Craig Trudell reporting from London. Diamond Sports Group has reached a restructuring deal with most of its debt holders and Amazon that will save the bankrupt local sports broadcaster from liquidation. Amazon's Prime Video platform will serve as Diamond's main streaming partner. That's according to a filing. Shares of Amazon right now are down less than 1%. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
You're listening to Bloomberg Markets on Bloomberg Radio.
And that brings us to 10:55 on Wall Street. That's time for an update on news from around the world. And for that, let's head to the Bloomberg 99.1 newsroom in Washington. And that's where we find Amy Morris. Hi, Amy.
Hi, John. It's on to New Hampshire now for the Republican presidential candidates after Donald Trump's landslide in Iowa, Nikki Haley's third-place finish. Bloomberg Government's Jonathan Tamari looks at the state of play ahead of Tuesday's primary.
New Hampshire looks like much more favorable ground for Haley. They have a more moderate electorate there. She's polling within about 7 points of Trump, which for any Republican is actually pretty decent, even though obviously, as we said, Trump is the favorite. DeSantis, the polls have him more in the single digits. So his path looks really narrow right now. It's hard to see where he gains momentum. He had put a lot of stock into doing well in Iowa.
Bloomberg Government's Jonathan Tamari reporting from Washington. Climate envoy John Kerry tells the World Economic Forum in Davos that he is stepping down from his role within the Biden administration so he can take on a more vocal position for the Biden campaign.
Because I'm a federal employee, I'm not allowed to engage in the campaign. That's not going to happen. So I want to be able to speak out on that and other issues globally.
Kerry assured the other world climate leaders that he'll still be around. A rescue worker says an explosion at a fireworks factory in central Thailand has killed at least 15 people. A worker with the Rescue Foundation says they're still trying to confirm the number of deaths. The photos were posted online by local rescue workers showing the site had been just leveled. More freezing cold temperatures are sweeping across the U.S. The National Weather Service says another Arctic cold front is plunging into the U.S. starting today. It could bring more record-setting cold temperatures. Forecasters say this new polar plunge could extend as far south as the Florida Panhandle, with lows dipping into the 20s and even teens in some places. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. John and Molly.
Oh, a polar plunge. I can't wait. I wish I were
You gonna do one of those, jump into the water? That seems off-brand for you.
No, that's the polar bear plunge. But
polar
anyway,
plunge, yeah, people do that.
I wish I were in Australia, actually.
Yeah, no polar plunge down there.
Molly Smith's here, so we have to talk. I mean, I had this whole thing lined up, and we just blew it out of the water because she's got to talk tennis.
Rightfully so. It would be a disservice to the listeners. So, everybody. So, yes.
The listener?
We're our first couple of days of the Australian Open right now, and Novak Djokovic hasn't found his best form yet, but he had a...
What is he ranked?
Number 1.
Oh, okay.
What are you ranked?
Me? I actually grew up with a tennis court, which it was
in Bayonne.
Well, it was kind of a crappy tennis court, so I'll blame that. No,
all right, it was the court's
backhand
problem.
Whatsoever.
Blame the wand, not the wizard, right?
Yes.
Okay. Well, Djokovic, he hasn't. He's playing his way into the tournament, so to be expected with the first week. Just want to get through it and get better with each match. A bit of a mixed results for the Americans so far today. So Chris Eubanks, he's out. He was made a deep run at Wimbledon last year. Let's see, Francis Tiafoe also just lost. But then we saw Taylor Fritz, Ben Shelton, and Seb Korda come through on the men's side. So that's some good momentum.
Okay,
and
we got to do women. Come on.
I know I'm getting to them next. Don't you worry. So on the women's side, the biggest upset so far, Ons Jabeur. You know her name?
I have no idea.
Okay. Well, she is she's made really broken down a lot of barriers for women in the Arab world in really all of sports.
Oh, that's interesting.
Yeah, she's from Tunisia. She's a top 10 player. She lost pretty comprehensively to a 16-year-old from Russia, 6-love, 6-2. So not a great start to the year for Ons Jabeur. But otherwise, the seeds are going through pretty comfortably. Be on upset alert for any other ones coming through, but those are the big headlines so far.
Your Australian Open, brought to you by Molly Smith and the good people here at Bloomberg News.
And John Tucker on the side.
Okay. S&P, I don't know a damn thing about tennis. S&P 500, 30 points lower. That's down 0.6%. 47.35. The Dow Jones Industrial Average, 37 points lower right now. That is down 0.1%. This is Bloomberg Markets.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Yeah, good morning. Traders continue to adjust their rate cut expectations as central bankers push back. But the U.S. consumer isn't falling off a cliff by any means. Sales hang in there. Chris Waller yesterday, more Fed speak today. We're going to hear from the New York Fed President John Williams. Lower borrowing costs, pushing more home buyers to step off the sidelines. Good morning. This is Bloomberg Markets. I'm John Tucker, along with Molly Smith. We are in for Paul and Matt. God knows where they are, but
maybe Australia, maybe Antarctica.
Maybe. First, let's get a markets update, and with that, I think he's in Washington. Here's Nathan Hager.
Where it's colder than it is in Antarctica, I think. Good morning, guys. We are watching the reset of rate cut expectations continue in the equity market. Fed swaps are now putting odds for a March rate cut at 60% after we got that stronger than expected retail sales data, jumping 0.6% in December, the strongest pace in 3 months. We got a little bit of a look at the why with Dana Telsey, founder and CEO of Telsey Advisory Group.
We had Christmas that was later this year, so people had more time in order to procrastinate. And so really everything was driven around the event days, whether it was the Black Friday weekend or then that week leading up to Christmas. It's what made the difference. It's not that holiday sales were so great, but goods sold at full price and sales came in line with expectations for the most part.
What's good for the economy looks to be bad for markets. We check the markets all day long on Bloomberg. S&P 500 right now is down 26 points, or about 0.6%. 4739 is the S&P level. Dow Jones Industrial Average now trading little change to the downside, now on 10 points to 37,348. NASDAQ 100's down 1.1%, or 176 points at 16,654. 10-year Treasury yield up 4 basis points to 4.09%. The 2-year policy sensitive at 4.35. That's a gain of 13 basis points. NYMEX crude's down 0.9%, or 66 cents lower at $71.77 per barrel. COMEX gold down 0.9%, a drop of $18.70 at $2,011.50 per ounce. The euro 1.0855 against the dollar, so a little bit of euro weakness. The British pound stronger against the dollar, 1.2659. The yen at 148.38. That is significantly weaker against the dollar right now. Bitcoin down 2.2%, right around 42,500. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Molly Smith.
All right, thanks, Nate. Appreciate it. Let's get a look under the hood right now. Stocks on the move, companies to watch. Bloomberg equities reporter Jess Medin. Jess, hi. How are you?
It's always great being here with both of y'all. I'm sure Paul's off somewhere in Aruba.
He's in Aruba. Matt's, with the new baby.
Of course. Matt's busy.
Parenting.
Yeah, exactly.
You got
with the
two
kids,
of
the
us
little ones.
Filling in.
Yes.
Let's start off with Schwab. I feel like this is a continuation of a story from last year. What does it have to do with assets under management?
So yes. And so if you look at the stock in particular this morning, SCHW is the ticker symbol on this. So right now it's down close to 3%. So on pace for its worst day since January 3rd. So the second trading day of the year there. But it did report declines in profit, new assets, and of course deposits. So it actually closed out what was one of the firm's most turbulent years in a 5-decade plus history that it has here. But it's really been trying to navigate this sort of difficult year of rate hikes. Obviously, we saw Schwab come under pressure, particularly last spring, in addition to some of those pressures that we did see with the regional banks there. But fourth quarter profit actually declined about 47%. So bigger interest payments on its clients' deposits and unfortunately debt dented those gains from a jump in its asset management fees. So you are seeing that stock pressured. And then also just year to date, that stock's down about 9%. It's also lost about a quarter of its value over the past 12 months.
Let's stick in the finance arena. What's going on with U.S. Bancorp today?
Yes, so USB is the ticker symbol on this stock. It's down about 1.5% on pace for its worst day, actually just since yesterday. So it did report earnings that did beat analyst estimates. So it actually was benefiting from elevated interest rates. But the problem there, and anytime we talk about the banks, as you know, Molly, is the net interest income. So when you're looking at the difference between the income a bank is earning from its lending activities versus the interest it's paying to depositors, that's where it came up short. So it totaled about a little around $4 billion on a taxable equivalent basis. So it actually ended up missing, unfortunately, analyst forecasts of about $4.15 billion. It came in about $4.14 billion. So it's down about around 4% from a year earlier. So that's why you're seeing that stock.
Okay, these are the regional banks we're talking about now?
Yes.
All right, so we're going to take a deeper dive in like 15, 20 minutes. So stick
There you
around for
go.
that one. You know, since the beginning of the year, I didn't try to, but I'm down like 10 pounds.
Oh,
and I didn't even go to Weight
but
Watchers.
you unfortunately had something else going on. You were
Yeah, I'm
you were ill.
He was unwell.
Unfortunately, it was not the
I just
Ozempic.
completely lost my appetite, which is like the first time in my life that's ever happened.
But yeah, you know what? Shockingly, you were here eventually, and
I thought she was
co-hosting shows.
going to say, shockingly,
No,
you look great.
No, that too. But like,
Oh.
no, you were still pushing
Yeah,
through,
no.
and I was, no, you look amazing, JT. That's not what.
Well, he's got
it's
his
not
very
what-
chic scarf on today. And his,
Because I
what
don't
do you
have
call
a
it, the fat
relapse.
suit?
That's why it's so freezing in here.
It is quite chilly in this interactive broker.
All right,
studio.
Weight Watchers.
I knew where you were segueing into that. So WW here, ticker symbol on this, down about 4%. And so worst day since yesterday, it actually declined 17% yesterday. So it's on pace for 5 consecutive days of losses. And of course, if we're talking
But you would
about
think,
this,
like with the new year and all the resolutions, Weight Watcher would like be a beneficiary.
It's gotta be Ozempic.
Exactly. So pressure from
on,
its
John.
GLP-1 drug. So it's similar to Ozempic. It's continuing to push the stock lower. So the catalyst, unfortunately, looking at there was a short report that came out recently from Cedar Grove Capital Management. So when you do end up having, when it comes to short sellers coming in and putting out some of these reports, you do see volatility in stocks typically. And unfortunately, this is it for Weight Watchers International. So that's why you are seeing that stock down. It actually came off the lows from where it was in pre-market and earlier this morning, but nonetheless still being pressured, especially over the past 5 trading sessions.
Well, so it goes over there. I mean, why would you go to do, what is the Weight Watchers plan? It's something with the points, right? And could take a pill instead.
And, right.
It's a trade-off.
Why bother with the points?
I guess so.
But yeah, over the past 5 trading sessions, it's lost around 30%. So
goodness.
that stock, not just
Gotta
today.
call up Oprah. They're gonna need a new campaign
Right.
or something.
And just ahead, we're gonna dissect this in great detail. But this airline merger gone bust.
Yes. So another update if we are, because I know we've talked a lot about what's happening with Spirit. So Save's the ticker symbol on this. It's down about 24% again today. So this did come after it actually lost 40% yesterday. So that would put it on pace for its worst 2-day stretch ever since it went public in 2011. So I pulled some of those numbers before I got in here. So those losses did come after a federal judge did block JetBlue's $3.8 billion acquisition of Spirit. So if you look over at JetBlue stock, JBLU is the ticker symbol on this, down about 7%, worst day since January 9th.
But everyone's saying, everyone in the investor community, that is, that this is maybe not so bad a deal for JetBlue. You get to save about $4 billion. You don't have to be stuck with this carrier that's now kind of seems to be circling the drain and possibly headed toward a bankruptcy filing. Spirit might be.
Yeah, so that's why you're seeing its stock not as pressured as when you are seeing Spirit in particular. So if you look over the last 2 days, about close to 2% decline for JetBlue compared to what we obviously saw the pressure for Save. So when you are looking at Spirit. So unfortunately,
All right.
Spirit getting hammered more so than JetBlue.
Jess Benton. Thanks so much. Appreciate it. Well, the headline of the Bloomberg kind of says it all, doesn't it? JetBlue's $3.8 billion Spirit deal turns into a nightmare. Antitrust concerns collapsing the merger between the two. Jen Rees, the Bloomberg Intelligence Senior Litigation Analyst, and George Ferguson covers the airlines for Bloomberg Intelligence. What a dynamic duo.
We've got
Jen,
a real good roundtable here.
let's start with you, Jen. What happened?
You know, I think that it wasn't all that surprising, this outcome. You know, people have been skeptical about this deal since day one, back in 2022 when they signed on. And really, it's because of JetBlue's plan to retrofit Spirit and turn those Spirit flights and routes into JetBlue routes. And obviously, just common sense tells you that that means the price is going to go up for these routes that Spirit used to fly, whether JetBlue competes with them on the route or not. And ultimately, that's what happened here. Even though the judge really accepted the large part of what JetBlue and Spirit argued in their defense, he still said, look, at the end of the day, there are still consumers that rely on this very low unbundled fare that Spirit offers that are going to lose out on that option. And that's consumer harm, and that violates the antitrust laws.
So, George, let's break it down looking at each airline here, the pros and cons for JetBlue versus Spirit now that this deal has unraveled.
Well, so, I mean, I guess initially the pros for JetBlue were that they were keeping Spirit out of the hands of Frontier, which had been a pretty large competitor, right? And maybe when they were all done, they got that, you know, they accomplished that goal. You know, JetBlue is going to spend, almost $4 billion on a company that the market now says is worth $600 million so that they could, you know, ingest their entire fleet, retrofit it with their interiors, try to bring a consistent corporate culture to it, a kinder, gentler corporate culture to it, and then compete at the 5th largest level in the U.S. airline industry. It was a tall task. I think it would have been years and years of challenges here. And again, you know, given current prices, seems like potentially a big overpayment. And right now, as we look at the U.S. airline industry, it looks to us like domestic fares are falling. We saw that at Delta at 4Q results last Friday. So we might even have an airline industry right now that has more capacity than it needs, because that's how you would, that's how you'd get fares to buoy, is if you pulled some capacity out of it. So to me, from a JetBlue perspective, it looks like a real good opportunity to walk away. For Spirit, look, they were the target in this whole thing. I think they, they brought some, good competition to the U.S. market as an ultra low cost carrier. I think they still could, although frankly, they didn't even earn earnings in 3Q. They weren't positive, which is typically the best quarter for a U.S. airline. And so they're struggling because of that domestic market. I think now they got to find a way to right the ship, get everybody focused on competing with Frontier, competing with JetBlue, competing with these folks, and reinvigorate this airline. And that's going to be, I think, very difficult given what they just went through.
Jen Rhee, the geniuses at JetBlue and Spirit, I don't understand how they did not anticipate this was going to run into regulatory problems. I mean, why initiate this in the first place?
I think George said something really interesting there, because early on there was speculation that they understood that they might have a problem and might not get this cleared, but at the very least it prevented Spirit and Frontier from coming together. And a combined Spirit Frontier would have posed increased competition to an independent JetBlue. There's no doubt. But I do think that they thought maybe they had a chance to convince the judge that coming together would allow them to better compete against the legacy airlines, which frankly have about 80% share combined. We're talking about United and American, Southwest and Delta, and really don't have a lot of competition from all the other, low-cost carriers and ultra-low-cost carriers. And they thought maybe that argument would carry the day, that this would be a good thing and pro-competitive, and they might be able to convince the judge that these pro-competitive aspects outweighed the harm that might be caused to some set of consumers. And the judge said, yeah, you're right. You would impose a greater competitive pressure on these big airlines, but it's not enough. It's not enough to overcome the harm to the consumers that the deal will bring.
Do they have any recourse, or is this the end of the road?
Well, they could appeal. I think it would be tough based on the way the argument's written and based on the fact that it's really an assessment of the evidence and the facts. There'd be a really high standard for reversal. So I think it would be an uphill climb for the airlines if they did appeal. And they may also not have the time to do it. It's a little tight. I think an appeal could get done in 5 or 6 months. Right now, their end date is July 24th, so they might be able to squeak under that end date, but maybe not. It depends on, the court schedule and whether they could get it expedited.
And George, is this really do or die for Spirit? I mean, how likely do you think a bankruptcy filing could be?
So I don't think it's do or die, but it's going to be very challenging. Right now, if you look at even consensus estimates on the Bloomberg terminal, Spirit, it shows that most analysts don't think Spirit's going to make any money for the next multiple years, 2 to 3 years. Again, you lose a lot of inertia when you go into an environment where you think you're going to get bought out by somebody else, right? And when it doesn't happen, it's really hard, I think, to sort of muster the troops and get the enterprise going the right direction. Spirit, Frontier, that level of airline in the U.S. is already having difficulty recruiting pilots and employees because they're just not the marquee names of the Delta, Americans, Uniteds, and Southwests. That's going to be another challenge. So, I hate to speculate on whether someone's going to bankruptcy, but it's going to be trying days ahead for Spirit for sure.
So, George, I need an update on Alaska Air, the Boeing, in the couple of minutes we have left.
Well, I think where we are right now is that Boeing and the FAA have worked together to come up with an inspection process to determine, whether other of these doors that are, have been capped are appropriately done. I think, the FAA now has sort of expanded the scope a little bit. They want to get into Boeing's manufacturing processes and how stable they are. And I think they want to get into that a bit before they sign off on this procedure for inspection. So the sign off for inspection is taking a bit longer than we thought. That obviously hurts customers because that means airplanes are out of service. I think the FAA is smart to dig into the manufacturing process. Clearly something is broken down there. And I think they need to exercise their authority. They've already looked bad on the MAX, right, because of the crashes that we had in 2018, 2019. That was more, I think that was more challenging because that was a design flaw, which had to be, sort of rooted through and adjusted. This is a manufacturing challenge, but it keeps sort of popping up sporadically. I think it's less intense of a change, but I think the FAA has already been, their reputation's been soiled a little bit already. They don't want to be back and have more problems with this airplane. So now they're going to dig into the manufacturing process as well.
Thanks, George. Appreciate it. George Ferguson covering the airlines for Bloomberg Intelligence, and Jen Rhee, our Bloomberg Intelligence senior litigation analyst. Again, JetBlue's $3.8 billion Spirit deal turning into a nightmare, getting nixed by a judge as well as regulators. Right now, let's get a reset of the markets. S&P 500, 26 points lower. That's down 0.5% right now. We're at 4739 in the index. The Dow, 38 points lower. NASDAQ 100, 165 points lower. That's down just about 1%. You're listening and watching to Bloomberg. That brings us to 11:18 on Wall Street. It's an update on company news. And for that, here's Steve Rappaport.
John, U.S. retail sales rose at the strongest pace in 3 months in December. The value of retail purchases, unadjusted for inflation, increased 0.6% in a broad-based advance. We get more with Dana Telsey of the Telsey Advisory Group.
We had Christmas that was later this year, so people had more time in order to procrastinate. And so really everything was driven around the event days, whether it was the Black Friday weekend or then that week leading up to Christmas. It's what made the difference. It's not that holiday sales were so great, but goods sold at full price, inventory levels were lean, and sales came in line with expectations for the most part.
That's Dana Telsey of the Telsey Advisory Group. Diamond Sports calls a play to stay afloat. Bloomberg's Dan Schwartzman reports.
Local sports broadcaster Diamond Sports Group has been saved from liquidation after reaching a restructuring deal with most of its debt holders and Amazon. The deal, which is subject to bankruptcy court approval, calls for Diamond to emerge from Chapter 11 proceedings with Amazon's Prime Video platform as its main streaming partner. Key creditors have agreed to swap their holdings for stock in Diamond and will also invest new money while Amazon agrees to take a minority stake in the company. Diamond Sports Group, a unit of Sinclair, once held the broadcast rights to around 40 teams in the NBA, NHL, and Major League Baseball. The company was purchased from Disney for $9.6 billion back in 2019. Revenue declined as people canceled their cable TV service. Dan Schwartzman, Bloomberg Radio.
Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Coming up to 11:22 on Wall Street, I'm Nathan Hager. We check the markets all day long on Bloomberg. Right now, the S&P 500 is down 24 points, or 0.5%. The Dow Jones Industrial Average is down 28 points. That's a decline of almost 0.1%. The NASDAQ 100 down 149 points, a drop of 0.9%. 10-year Treasury yield up 4 basis points to 4.1%. The 2-year yield 4.35. That's a gain of 13 basis points. All this after stronger than expected December retail sales data pulled back bets even further that the Fed could cut rates as aggressively as the market has priced. Fed swaps now put 60% odds on a March rate cut. That's down from 80% on Friday. Adding to the risk-off mood, NYMEX crude down a third of 1% now at $72.18 per barrel. COMEX gold is down 0.9%, down $17.60 at $2,012.50 per ounce. The euro weaker against the dollar at 1.0858. The yen is at 148.45. One of the biggest downside movers right now, Tesla. Those shares are down 3.1%. Investors Business Daily is reporting the EV maker is cutting Model Y prices in several European markets. That's after it halted production of the Model Y at the Berlin area Gigafactory as of January 29th. Also watching shares of Mattel. They are down 2.2%. Morgan Stanley downgraded the toy maker to equal weight, citing a tougher outlook for this year and limited growth drivers for the toy market. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Molly Smith.
Nathan Hager in Washington. Thanks very much. Appreciate it. I am John Tucker along with Molly Smith. We're
That's
in
me.
for Paul and Matt. God knows where they are. Anyway, we had regional bank earnings getting into full swing. Two of the better-known regionals reporting some big profit declines in the fourth quarter. We had Citizens and also U.S. Bank. Here to break it down for us and the implications and all that stuff, Bloomberg Intelligence Senior Regional Bank Analyst Herman Chad joins us to break things down. The last time you were in the studio, we were talking about the regional bank crisis.
Right.
Is this like part of that, or
the crisis has largely gone away at this point. It's more paying for the cleanup of the crisis is what's happening in the fourth quarter, where the banks collectively that have survived are paying the FDIC for a special assessment charge. And so that's hitting all the banks, which is driving the profitability declines for fourth quarter. But if you just look at the underlying performance across the banks, it's still a bit weaker, but as expected, given where we are in the higher rate environment and there's not a lot of lending that's happening. But fourth quarter or full year guidance for 2024 looks like it's going to be a bit better in the back half of the year. So a bit more sluggishness in the first half, but improvement in the back half, hopefully when rates do come down.
Okay, so better times ahead, potentially. That would be nice. Let's break it down a little bit further. We had some earnings come out today from Citizens Financial and U.S. Bancorp. Tell us a little bit about what happened there.
Yeah, sure. So I think the overall theme for both of the banks is that there's not a lot of loan growth. You're seeing commercial customers still being a bit shy in lending just because of the higher rate environment is creating some sticker shock. The areas of growth that are happening right now is, and you're seeing that a bit more on U.S. Bank side, is that cards and credit cards. That's the banks that reported last week, like JP Morgan and Bank of America, also highlighted growth in credit cards. It's one of the few bright spots across the lending landscape for banks in general. Net interest margins are starting to decline, but a bit less as as the Federal Reserve pauses and potentially stops rate hikes, and that's positive as you can remember, banks have continued to face headwinds on higher deposit costs. So that just means that there's been a bit more sluggishness in the fourth quarter, and that'll continue over the next couple quarters as banks sort of muddle through the higher rate environment until the Fed starts cutting.
So when you're saying credit cards are a positive for the banks, what does that mean, though, for consumers? What's actually happening?
So what's happening is the consumers are using their cards a bit more, and so they're carrying more balances.
Keep spending.
Right, spend. That's happening.
But if they're spending on the credit cards and maybe they don't have the money to pay the bills, the loan loss provisions that these regional banks have to put up, is that higher?
Yeah, that's right. So you're seeing higher
sounded
losses.
like I knew what I was talking
That was very intelligent.
That was
Keep
very
it going.
impressive, John. You're seeing higher loan losses and higher defaults on cards. And U.S. Bank in particular had talked about this on their earnings call a little bit earlier this morning and saying that the charge-offs on their card portfolio is now basically near pre-pandemic levels. So you can think of last year before, stimulus and just higher wages helped suppress losses. But now we're at the point where the losses are back to where they were a few years ago before the pandemic.
Is anybody in danger of becoming toast?
At this point, there's not a lot of concern or angst about the next shoe to drop in terms of another bank following SVB, Signature, First Republic. You're seeing some M&A activity from some of the more challenged banks. Banks like Home Street the other day mentioned that they're partnering with another institution. PacWest, that bank was another bank that was challenged during the height of the banking turmoil in March and April of last year, and they found a partner. So it seems like the decks have sort of cleared, and we're now at a baseline where any of the challenged banks have rectified their issues via M&A, and everybody else is just moving on as a independent entity.
Doesn't sound like that option is available for the airlines, though. Can't get your way out of your troubles with M&A. But as you mentioned, some consolidation in the regional banks at least. And we've got a couple more earnings tomorrow out of M&T and Northern Trust. What are you looking for there?
Yeah, so M&T is another bank that we cover. It's a bank that has benefited from M&A, as you mentioned. They bought a bank up here in the Northeast in Connecticut. A lot of the same stories, same sort of themes across the regionals where lending's just really challenged. M&T in particular has more commercial real estate orientation than others, so you could see some focus on credit quality, potential losses in their office commercial real estate portfolio, and then just expectations on when their revenues start to bottom and then start to inflect higher potentially later in 2024.
How onerous were these FDIC fees and all that stuff?
Yeah, so it ranges by size. So the FDIC sort of charged each bank a certain percentage of their deposits to
But it's like in Congress, weren't like the people, the Congress people who represent those small regional banks, weren't they up in arms about these onerous?
That's right.
That's my word.
So
FDIC charges.
The onerous FDIC charges are largely relegated to larger banks. So the smaller community banks don't have to pay. So this is more of the purview of the JP Morgans and the larger regional banks of the world.
And how about those community banks? Where do they fit into all this as well?
Yeah, so that's a challenge, right? So the smaller the bank, the more commercial real estate exposure you have. So we're in an environment where that loan type isn't really growing because of higher rates, and you don't want to add more potentially riskier loans to your balance sheet at this point in the rates and credit cycle. So it's been a bit of a challenge. And then on the funding side, you've seen the biggest banks, the largest banks like JP Morgan and B of A sort of gather deposits and sop up all the deposits as the industry faced worries earlier in the year. So if you're at a smaller bank, you probably are saying, wait, I don't want to take the risk that my bank will end up like SVB. So I'm going to go to a too big to fail institution like JP Morgan, and I can sleep well at night knowing that that institution is going to be around. So the smaller the bank, the more questions I think your customers start to ask, and that's continuing. And it sort of dovetails into the question of, is there going to be consolidation down the road of the 4,000 or 5,000 institutions in the U.S.? And I think that's just going to be the case where you see more consolidation as scale matters, increasing your tech investments matters as you compete with the fintechs and the JP Morgans of the world. So all that sort of means that you're going to have to grow inorganically and organically in order to compete with tough competitors.
Do we still look at what do we look at in terms of trying to spot another Silicon Valley bank? Is it equity, capital, or what? And we've got about a minute left.
Sure. So I would say that those three banks that failed earlier last year really had different business models. They had very concentrated deposits into focus on uninsured deposits, growing their balance sheet much faster than their peers. So I think what you've seen is that those banks, higher growth banks, it's an oxymoron at this point. You have to be slow and steady, and that really wins the race in regional banks.
Are regulators more equipped to spot the next disaster? Because they didn't spot SVB, right?
They're like more equipped to spot the previous disaster. It doesn't seem like they're nimble enough to really think ahead at this point, but we'll see.
Rates are coming down now, though, so everything's fine.
Oh, you're such an optimist. Bloomberg Intelligence Senior Regional Banks Analyst Herman Chan. Thank you so much for stopping by. Great to see you, and Happy New Year. Right now, market reset, S&P 500, 24 points lower. That's down 0.5%, 47.41 on the index. The Dow is 12 points lower, and the NASDAQ 100 right now, 143 points lower. That's down about 0.9%. You are listening and watching Bloomberg Markets. And let's get an updated world and national news. For that, we head to Washington, the Bloomberg 99.1 newsroom, and here's Amy Morris.
All right, thank you, John. Secretary of State Antony Blinken is stranded in Davos for a while because his plane broke down. The Boeing 737 was deemed unsafe to fly because of an oxygen leak. A smaller shuttle jet will be used to bring him home, and his staff and members of the press pool, they got to fly commercially. The governor of Georgia says Trump's victory in Iowa for the Republican primaries was a strong win, but warns not to repeat the 2020 election. Brian Kemp, governor of Georgia, tells Bloomberg Surveillance at the World Economic Forum in Davos The GOP just needs to keep moving forward.
We need to be forward thinking. We need to tell people, what we stand for, what we're going to do. We don't need to be looking in the rearview mirror and relitigating the 2020 election, and really lay out for the American people what it is we're going to do. That's what I've been urging the candidates to do, and that would go for former President Trump as well.
Georgia Governor Brian Kemp on Bloomberg surveillance in Davos. Pakistan has recalled its ambassador to Tehran a day after Iran launched airstrikes on Pakistan. Iran claimed it targeted bases for a militant Sunni separatist group. Islamabad called it a blatant violation of its airspace. Iran and Pakistan have long been suspicious of each other over militant attacks. Since 1991, overall cancer deaths have fallen by a third. The latest American Cancer Society statistics report shows the latest numbers in the U.S. and estimates future cases or outcomes based on those statistics. Science officer Dr. William Dayhud says rising colon cancer rates have actually shifted mortality patterns in adults younger than 50 years old. And colorectal cancer has become the #1 cause of death among men under 50 years old. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
$11:40 on Wall Street. I'm Nathan Hager. Right now, the S&P 500's down 22 points, or about 0.5%. The Nasdaq 100's down 0.8%, or 127 points. The Dow Jones Industrial Average is swinging between gains and losses. Right now, it's little change to the downside. One of the biggest components of the Dow, Boeing, is higher by 1.4%. Operators of the grounded 737 MAX 9 have finished inspections on 40 planes. That is a key step to getting that model back in the air. But the broader market is focused on the data and what it means for the path for the Fed. Steve Cheverone, head of multi-asset strategy at Federated Hermes, says the market's gotten too aggressive on rate cut bets, and it's not just because of the data.
This is a presidential election year, and historically the central bank does not like to move between July and November of an election year. So it really only leaves, in our mind, May, June, maybe December for cuts. And that's fine, and I think that's positive for the economy, but the market just got ahead of itself in the fourth quarter.
And after we got retail sales figures that came in stronger than expected, the yields on treasuries are moving higher. The 10-year's at 4.09%, a gain of 3 basis points. The 2-year at 4.34, that's 12 basis points higher. NYMEX crude is down 0.4% at $72.07 per barrel. COMEX gold is down 0.9% at $2,012.40 per ounce. The euro 1.0859 against the dollar. British pound 1.2670, and the yen is at 148.33. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Molly Smith.
All right, Nate, thanks a lot. Appreciate it. Can I say jaw-dropping data this morning on retail sales?
Yeah, why not?
I mean, it was just like way off expectations.
The consumer, loves to surprise. Isn't that no recession? That's been the story, John.
Or I think, as I put it, the consumer is not falling off a cliff.
Yeah, that was your crystal ball this morning. You nailed it. And I said we had to hold tight just to make sure.
U.S. retail sales, as Molly wrote in the Bloomberg story that you can read on Top Go, rising at the strongest pace in 3 months in December. Treasury yields popped on the news. So how does this all gel with the current investment climate? Let's put that to our next guest. Gitu Sharma, founder and investment manager at Alpha's Future, joining us from, I'm going to guess, the coldest place on the planet Earth right now, Minneapolis. How bad is it?
Hi there. Yeah, it's pretty cold here. I think with the wind chills, it's about -20.
Oh, worse than Antarctica.
Molly's just back from Antarctica. She says it's colder here in New York than it was in Antarctica.
I'm serious. Antarctica, it's summer right now. It's beautiful down there.
All right. Well, anyway, every time I count out the American consumer, I'm dead wrong. What do you make of the data that we got today? And more importantly, what does it imply for Fed policy and just markets overall?
Yeah, I think like you were talking earlier, the consumer remains very strong and is consuming, is willing to spend, and we're not seeing any kind of slowdown in demand right now. Besides the strong retail sales data, we also read about positive home builder sentiment, the mortgage demand going up as well. And last week, we saw unemployment rate at about 3.7%, which is, one of the lowest for 50, 60 years. So we're really not seeing any kind of sharp, significant slowdown that would imply that a recession is coming. In fact, we're seeing a consumer and an economy that continues to be very strong, very resilient in the face of high interest rates. And inflation has come down, so that of course is giving a positive boost to the consumer as well.
Of course, and you had mentioned in your notes just before the show, Gitu, that the outlook for disinflation remains uncertain. And obviously we did see that CPI report, I believe that was last week. The time is flying, but it was, as you said, it's a bit bumpy. So how are you parsing through these different reports and really, sticking to your guns that inflation is on a firm downward trajectory?
I think it's at this point of time, it's really hard to say how far inflation will go down further. We've seen some really sharp declines in 2023, and that has brought inflation down from 9%, from a high of 9% in June 22 to about 2 to 3% right now. But it's often said that the last leg is the most difficult, and we did see the recent CPI data slightly nudge up. And one of the biggest challenges, I think, for the Fed is that wages continue to be very sticky, and that's trending around 4% right now. And that can keep inflation at the current levels of 2 to 3%, which is still above Fed's target. And as long as the economy is staying strong and the inflation is stable at this higher number, I don't see how the Fed would want to cut so rapidly as the market is expecting.
S&P 500, as you mentioned, it ain't cheap at this point. But I look a little broader, small, mid caps. Not only do they seem to be massively under-owned by investors at this point and by institutions, they're about 13 to 14 times earnings. You can own these. Is that an alternative?
I think it's a very difficult situation in terms of investing right now, because what we've seen is a large part of last year's rally was driven by tech and AI and secular trends around AI. And the rally was not only in the large cap tech, but also in the small and mid cap tech. So there is this segment of the market which has high growth, strong cash flows, profitable, and continues to do well and has expensive valuations. On the other hand, you have everything else in the economy, whether it's industrials or discretionary or even the defensive sectors that have not participated in the rally, have underperformed last year, and are at, especially the industrials and the financials, energy sectors, they remain exposed to recession risk. So they're more cyclical and have downside risk if we do head into a recession. So the question is, do you continue to invest in tech, which has this positive profitability, demand, growth trends, but is expensive? Or do you, how much of your portfolio do you weigh in towards some of these value sectors which have not performed so far?
Is there like a magnificent seven in like small and mid caps?
I don't think so.
All right.
They're all magnificent across the board there. Gitu, so if we're talking about the possibility of recession, I feel like we've got to talk about these Fed wagers here and looking at investors that are pricing in as many as 6 rate cuts next year. Obviously, the Fed's dot plot indicating just 3. Where do you stand in that debate? Because that's a pretty big discrepancy between 3 and 6. And also, why do investors just not believe the Fed time and time again?
So I think the market tends to swing from one end to the other. And a lot of the market projections as well as the Fed projections have not come true for a while. The market expected recession in 23. That didn't come through. We were expecting one more rate hike towards the end of the year. That didn't come through. So there's been, data has been shifting. And it's really, hard to predict what's going to happen. But clearly, this difference between what the Fed is anticipating, which is a soft landing scenario, stable growth, inflation going to 2% by 2025, the Fed is looking at normalizing interest rates to about 4.5% this year. Whereas the market is forecasting a more dire situation that ultimately leads to a recession, and the Fed has to cut a lot more.
Okay.
I think it remains. This remains a big debate in the market right now, and every day we are seeing moves that are reflecting, a shift from one side of this debate to the other, not really finding a direction.
We're going to have to leave it there. Gitu Sharma, founder and investment manager at Alpha's Future. Thanks for being with us today. I really appreciate it. From, what'd you say, 20 below wind chill, Minneapolis?
Will not be signing me up for that. No, thank you.
I thought you liked the cold.
We'll stay here in tropical New York.
Miss Antarctica. You're listening to Bloomberg Markets. And that brings us to 11:50 on Wall Street. Let's get a look at company news now with Steve Rappaport. Hi, Steve.
John, shares of Spirit Airlines continue to skid after a multi-billion-dollar partnership encountered turbulence. Bloomberg's Gina Cervetti reports.
JetBlue and Spirit Airlines say they are evaluating their next steps after a federal judge blocked their merger, siding with the federal government, saying JetBlue's takeover would stifle competition and raise airfares. The companies had argued that combining was the only way to compete with the dominant airlines.
Thanks, Gina. Apple is opening its App Store to allow outside payment options. More on that from Bloomberg's Jeff Bellinger.
Steve, Apple made the move after the Supreme Court rejected the tech giant's appeal in an antitrust lawsuit challenging its business practices. Apple will allow all third-party apps sold in the U.S. to include an outside link to a developer website to process payments for in-app purchases. That will bypass Apple's own payment system, which charges developers a commission of either 15% or 30%. Apple will warn customers when they press a link to conduct purchases outside the App Store before letting them proceed. Steve?
Jeff, in some good news for Apple, the company topped its main rival in smartphone sales. The iPhone dethroned Samsung devices to become the best-selling smartphone series globally last year. Do you have banking experience? Well, while some big banks have been cutting jobs, JP Morgan Chase says it's hiring. President Jamie Dimon told Bloomberg TV JP Morgan sees opportunities in retail, the payments business, and wealth management. Citigroup, Morgan Stanley, and Goldman Sachs, on the other hand, have cut staff. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
You're listening to Bloomberg Markets on Bloomberg Radio.
And I'm John Tucker along with Molly Smith. We are in for Paul and Matt. This is the Bloomberg Markets, and this brings us to 11:55 on Wall Street. Let's get an update. News from around the world, and let's head to the Bloomberg 99.1 newsroom in Washington. And Amy Morris. Hi, Amy.
Hi, John. It's on to New Hampshire for the Republican presidential candidates after Donald Trump's landslide in Iowa and Nikki Haley's third-place finish. Bloomberg Government's Jonathan Tamari looks at the state of play ahead of Tuesday's primary.
For Haley, it really all comes down to New Hampshire. This is where she's made her big play. Again, with coming close to the president, she's got to really do well there and hope that sparks some more momentum, because in the states that follow New Hampshire, they look like they really favor Trump as well. So if she does not do well, it also doesn't look like she has much of a path. If there's going to be any real contest, it depends on Haley doing well in New Hampshire and then consolidating support after that.
And now comes where the super PAC that supports Ron DeSantis in the presidential race began carrying out layoffs today. Buckingham Palace says King Charles III will undergo a corrective procedure for an enlarged prostate. Also, Kensington Palace says the Princess of Wales, Princess Kate, has been hospitalized after undergoing abdominal surgery. She'll remain at the London clinic for up to 2 weeks. The Pacific Northwest is hunkering down after predictions of ice and freezing rain. Bloomberg meteorologist Rob Carolyn says, try to hang in there for the next couple of days.
Arctic cold continues the stretch from the northern plain states on into the southern plains and then across the Gulf Coast, the Tennessee River Valley, and into the southeastern United States. We've had temperatures as cold as 5 to 10 below zero over parts of Tennessee this morning. And the good news is we'll see temperatures moderate over the next 24 hours, but another area of very cold weather will be dropping southward through the plains and into the central United States as we head through the next several days and into the upcoming weekend. We should see temperatures moderating across a large section of the country, though, during next week.
Until then, much of the United States is coping with bitter weather, and some places are putting electricity supplies at risk. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. John and Molly.
Amy Morris in Washington. Thanks, Amy. Appreciate it. You see this story in the Bloomberg? And I'm going to say this is the last thing that Boeing needs in terms of bad publicity.
Brutal. Blinken, that would be U.S. Secretary of State Antony Blinken. He was stranded after the Boeing 737 breaks down on the Davos trip. So he's now at the World Economic Forum, was flying from Davos to Zurich, and the Blinken and his party were informed that the aircraft had been deemed unsafe to fly. An oxygen leak detected previously could not be remedied. So they had to get on a smaller plane to go home, and get this, his aides and members of the press had to travel commercial to Washington.
Oh, man. Well, I guess if you're going to get stranded somewhere, Switzerland is not the worst place I could think of.
Yeah, I know. A lot of planes going in and out of there. So they should be okay. And it looks like Boeing's okay, too, on the day. The stock is up a little bit. Obviously, it's been a rough couple of weeks for Boeing, but at least today, not too much damage.
You know, I go by, on my commute by Newark International Airport, or Liberty, whatever they call it now, and there were a bunch of Boeing jets lined up by the turnpike, like 5 or 6 of them.
Really? Just parked?
I'm wondering, are those are probably the 737 MAX 9s that are still grounded, right?
I was wondering that, too, because I actually just flew into Newark yesterday, and I don't think I was on it, but I didn't actually look up what jet I was on. What's that?
The peripatetic Molly Smith.
I've been everywhere. But yeah, I mean, it's I did not have my reporting cap on at the time to look into it further.
You never take off your reporting cap, Molly Smith.
Lesson number 1 from John Tucker.
So the jet that Blinken that's an older variant of the 737.
Yeah,
the Air Force uses it as, I mean, if you're an Air Force person, that's what everybody knows is the C-40 in the Air Force. So anyway.
Yeah. Well, for us peasants, yes, we would not know that, but to the Air Force world.
So another black eye, I would say, for Boeing at this point. Anyway, the market reset, S&P 500 right now, 27 points lower. That's down 0.6%, 47.38. The 2-year yield, that's what I'm watching right now. That's higher, up 14 basis points after the data today, 436 on the 2-year. You're watching and listening to Bloomberg Markets. I'm John Tucker and Molly Smith.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Shop till you drop. Retail sales rising the most in 3 months. That's sending Treasury yields higher, stocks lower, with the idea the Fed rate cuts will be later and maybe not as deep. This is Bloomberg Markets. Paul Sweeney and Matt Miller out. I'm John Tucker, along with Molly Smith.
Yes, good afternoon. Here again, saddling
All
up.
fresh and ready to go from after her trip to Mexico and Antarctica.
Very fresh, that's right. And we've got another great hour coming up here. I know, you've been in Bayonne. You're holding down the fort. Thank you, John, for your service.
You're welcome. Let's get to midday markets reset now with Bloomberg's Charlie Pellin. Hi, Charlie.
Thank you very much. Well, hello there, and here's what's going on midday. A lot of red on the screen. We got more on the markets coming up in a moment, but the S&P right now down 27, drop there of 0.6%. Dow Industrials down 40, a decline right now of 0.1%. And the Nasdaq Composite Index is down 130, a drop now of 0.9%. 10-year yield 4.09%, with a 2-year that's yielding 4.36%. Gold lower again today, down another $22 the ounce to $2,006, a drop there of 1.1%, and a further retreat for West Texas Intermediate crude back below $72 a barrel, 71.68 on WTI, a drop there of 1%. Bitcoin moving lower today. Bitcoin right now down by 2.9%, 42,269 on Bitcoin. Traders are trimming bets for Federal Reserve rate cuts. Liz Ann Saunders is chief investment strategist at Charles Schwab.
So I think the market may slowly be adjusting to what, frankly, most Fed speakers have been trying. The message they've been trying to impart is, whoa, all else equal. Given what we know now, it is probably not a backdrop supportive of not just starting as soon as March, but the Fed providing, 6 rate cuts this year. I think that disconnect still exists. It's just not as wide as it was even a week ago.
And you can hear more of the conversation with Liz Ann Saunders on the Surveillance podcast. You can download it wherever you get your podcasts. Again, 10-year yield right now, 4.09%. Earnings this morning from a couple of banks. U.S. Bancorp, its shares lower now by 1.7%. Also reporting earnings this morning, we heard from Citizens Financial, based out of Providence, Rhode Island. Citizens shares up now by 1%. Recapping, stocks lower, S&P down 28, drop there of 0.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. I'm John Tucker, along with Molly Smith. This is Bloomberg Markets, and time now to take a closer look. Let's look under the hood of the markets right now. Stocks on the move, some of the companies to watch. Nora Melinda rejoins us from Bloomberg News. Let's start off with Schwab, and I guess it's a story about assets under management.
Right. I mean, we talked about this earlier this morning. I'm sure you guys have been talking about it throughout the day, but Schwab is still in focus this afternoon. It's down as much as 7.2% for its biggest plunge in 10 months. The firm reported a decline in net new assets for the fourth quarter, and the CEO and the company have pretty much marked last year as one of the most challenging years. He specifically flagged it as the most challenging time for him since 2000.
Long time ago. Yeah, he was flagging then since the internet bubble burst. So, yeah, not a great day over at Schwab. Let's stick in the financial space a little bit and shift over to PayPal. Interesting interview that the CEO had with CNBC this morning.
Definitely. So PayPal, it was earlier down as much as 3.4% for its lowest intraday level since November. Its CEO was speaking on CNBC and said that PayPal has completed too many acquisitions over the past few years and will now prioritize profitable growth, like its Venmo business. It says the company will be moving away from unprofitable businesses And shares of PayPal have plunged almost 30% over the past year as earnings faltered and the company lowered its full year guidance for adjusted operating margin.
Okay, let's move on to our next stock. I forgot it was called Maple Bear. Remember
so
the show Starsky and Hutch? The character who was like the pimp, he was Huggy Bear. So I confused
Not
Huggy
Pooh
Bear
Bear?
and Maple. What is Maple Bear?
I mean,
So
Molly and I
weird.
were just talking about this, did not know that that's what it was called. So news to us both. Instacart shares are climbing as much as 7.6% for their best days in nearly 2 months, after an analyst at Wolfe Research said that Instacart could be an attractive takeover target for Uber. The analyst upgraded Instacart to outperform from peer perform with a $35 price target on the prospect of a potential deal. Now, while all of this is maybe like, some speculation, shares are really popping this morning or this afternoon after that thought.
Okay, so what are shares of Uber on the other side of this?
Yeah, I mean, on the other side, Uber today has been down as much as 3.1%. So, not seeing the same lift that we were seeing with Instacart.
I gotta say, antitrust. Are we not looking at this? I don't know. I feel like this is the only thing I can think about.
But these
when
aren't
people bring up
airlines.
So topical.
Yes, but this is. I'm just gotta say. I mean, it seems like that is, the real theme of the Biden administration is just striking down a lot of M&A on antitrust grounds. So I'm not really sure why this keeps coming up. A lot of these deals just are not going through.
Mm-hmm. And the analyst, mentioned DoorDash and Amazon as some of the rising competition that Instacart has had to deal with, as Instacart has been slumping in recent months. So I think investors may think that this is a little bit more interesting as to why these shares are popping today. But as you mentioned, lots of things to be thinking about when you think about antitrust and M&A.
A couple of curveballs, I guess. We saw those figures on mortgages coming down, so I guess more transactions coming through. Did you look at the home builders? What if anything's happening on that front?
Yes, so that's a space that I cover very closely as I look at real estate.
That's right.
Ding, ding, ding.
Yes, my space. But we did talk about earlier how MBA mortgage applications climbed to an almost 6-month high last week as buyers move off of the sidelines. Molly wrote that one up. But Redfin also said that Gen Z's home ownership rate has stagnated in 2023, but millennials and Gen X saw gains, which, as you can expect, was pretty expected, but sad day for Gen Zers like myself.
That's why John's giving me a face right
What's
now.
the cutoff for Gen Z?
What are you guys,
cutoff?
25?
15?
I don't know.
Okay.
I'll have to get back
I
to you
think
later
I
on
am
that
on
one.
the side of a younger millennial, and I am newly 30.
Yeah, rub it in, why don't you? Nora Melinda, thanks so much for stopping by. Don't come back. Too young. Anyway, okay. I swear this actually just happened a few minutes ago. This is an email I got. Hi, Jay Tucker. You have won an club car golf cart. Congratulations. Your name came up for a get brand new club car golf cart from Lowe's. I didn't know Lowe's sold these things. Hurry up, your reward is ready. Claim reward. Should I click on this?
This sounds like fishing to me.
Okay. What's the cybersecurity?
Fishing with a PH, that is.
Okay. What's the cybersecurity outlook? Let's see. Wendy Whitmore is head of Unit 42 at Palo Alto Networks. Our next guest in studio with us. Thanks for stopping. Why would you leave Palo Alto to come to New York? It's like 20 below here.
It is cold here. There is no doubt about that.
Anyway, tell us what is Unit? Do I have that right? Unit 42?
Yeah, Unit 42 is really Palo Alto Network's special forces on the ground, if you will. So we consult, we solve our clients' crises, so incident response and breach investigations, threat intelligence, and threat hunting throughout the world.
And tell us a little bit about your clients. Who are they? What kind of work do they do?
Our clients really do a bit of everything, right? They are Global 2000 companies, they're smaller organizations, they're governments throughout the world. We partner with a tremendous amount of intelligence organizations to share information throughout the world as well, related to cyber threats and attacks.
Okay, what's the landscape right now in terms of cyber security? I mean, it's just like, I also get at least once a month, it seems now, a letter from whatever organization. Last month it was from Robert Wood Johnson University Hospital System saying they had a breach of their security, their computer systems, and some data, patient data, was leaked out. And here's a consolation prize. We're going to give you a year free of cybersecurity threat detection,
Credit
or
monitoring, right?
whatever it is,
Yeah.
credit monitoring. What's the landscape right now? Things seem to have gotten a lot worse.
The landscape is a bit chaotic, especially going into 2024, where we're going to have over 60 major elections throughout the world happening in this year alone, right? This will be the largest voting that's ever occurred. So I think an easy way to remember it is the 3 S's: speed, scale, and sophistication. We're seeing attacks happen faster than they have been before. So when an attacker gets in an environment, they are stealing data within a matter of hours in some cases. From a scale perspective, you mentioned, maybe on a weekly basis that you're getting a letter, right, about another breach that's occurred. This scale, attackers for the first time in history, they're no longer doing only spear phishing, which is sending an email to an employee, right, and they click on a link and they get infected that way. They're actually exploiting vulnerabilities at scale. So within hours, there could be hundreds of thousands of systems affected by a 3CX, a Microsoft Exchange, for example. And then sophistication. It's long been certainly that nation-state actors are highly sophisticated, but now we're looking at cyber criminals who have a deeper understanding of business-to-business interactions and processes than we've ever seen before, and they're using that to their advantage.
Wow. So a few things.
Scary.
I'm scared. A few things you just mentioned there that definitely made me scared. You're mentioning cybersecurity, elections, and nation states. Of course, it makes me think 2016. We are heading toward another election here in the U.S. Very likely could have Trump on the ballot again. I don't know. Do we start thinking again about potential Russian interference in the U.S. election? I mean, where is your mind at right now in terms of threats with this election coming up?
I think that's a great question, but I think the reality is we have to be thinking about nation-state interference from countries throughout the world, right? We have now, with the onset and advent of generative AI, we have the ability to speed up written and verbal communications and make them sound more polished and genuine than we've ever seen before. So I would imagine from a disinformation campaign, we're going to see more of those emanating from throughout the world, and we really need to be, concerned about where information's coming from.
From a business perspective, and particularly one of the areas I cover, the small businesses, and they are especially vulnerable because they just don't have the resources, I would imagine, to combat this on a regular basis. They're liable when that information, when a client's information is stolen, right? I mean, from a legal perspective, they have to keep that in mind.
Certainly, cybersecurity is really a team sport at this point, and you hit on a key factor of that, which is small businesses are not only responsible for their own information, but for those of their clients, and they may have a chain where they're part of a big supply chain for a large organization that does have more resources. So that is a huge challenge for executives throughout the world today, is to make sure that not only they're securing their own communications, but their clients, their consumers, and everyone they're doing business with.
Yeah, this was actually even like a really big topic heading into Davos this week, that the survey that some of these diplomats were conducted on heading into the World Economic Forum, that they ranked misinformation and disinformation as the top risk out of 10 for the short term and the long term. So thought that the short term risk being this misinformation. So that is really interesting. I mean, how does that then affect like the work that you do? Do you feel like this is even more like under a microscope and being scrutinized right now?
Well, I think the challenge with disinformation, for example, is it's not like a traditional cyber attack where you're necessarily stealing data from an organization and there's some piece of evidence to prove, right? It really relies on the reader, the viewer, the consumer of that information to be discerning and to understand and do their fact checking to really, get to the degree of, is this information legitimate or not? To the degree that it has impact on a business and the economy, I think that's a, true factor. So 2024, we're likely to see more of that than we've seen before.
So with computing capacity, growing exponentially, et cetera, so forth, I would imagine it's not a question of when, but if, not a question of if, but when you're going to suffer a cyber attack, a devastating cyber attack. How do you protect yourself?
Yeah, no doubt. Organizations are aware this is happening at a faster pace, right, than we've ever seen before. So I think the keys there are really being able to understand what visibility into your environment, so understanding what are legitimate communications and interactions, what are not, and then what something that everyone can do is practice in advance, right? Practice these plans, make sure you know how to get a hold of your employees and your team members, and in the event that you don't have access to your primary email and other types of communications, that you can really respond quickly. On a personal note, I cannot stress enough, do not reuse the same passwords for every single account, for every application.
Oops.
And for every application you can, make sure you have multi-factor authentication enabled so that you make yourself less of a target.
And don't click those emails, John. Stay alert.
Wendy, do you have like, just anecdotally, like give us some horror stories that you've dealt with?
Well, so for example, just last week, we're working for an incident response, meaning a breach investigation for a healthcare organization. And in this case, it's a ransomware actor. Not only did they reach out to try to extort the healthcare organization, they're reaching out individually to patients. And in this case, it's cancer patients. And they're saying, hey, for $3, you can preview the information that we've stolen about you. And for $50, you can pay us to make sure that we don't expose this further on the internet. This is horrific behavior. We're likely to see more of this as these ransomware actors continue to monetize their attacks.
Are they ever caught, the ransomware actors? Or are they in, Russia or some far off place where you're never gonna, you just can't reach them?
Well, the great news, I think, is there's a lot more information now. So multiple governments throughout the world are collaborating on these attacks. We have law enforcement actually going after disrupting these ransomware actors, their infrastructure, so the tools that they're using to host and wage these attacks. And then certainly we are moving to the point where we're now disrupting from an actual arrest standpoint too. So good news, but still slow going in that aspect.
So one more here for you, Wendy. We had some news out of JP Morgan this morning. They were saying that they've seen an increase in hackers that are trying to infiltrate their systems, and JP Morgan spends about $15 billion a year on technology as part of its attempts to bolster its cyber defenses. Obviously, we're not all JP Morgan, but this could get very expensive.
Oh, no doubt. I mean, this has a true economic impact, right? But I think the good news there and the silver lining is we're seeing so many more organizations really effectively prepare to detect these attacks. So in JP Morgan's case, they're detecting them, they're preventing them, they're gathering data that they're sharing with the community so that more others can also protect and defend themselves as well. So I think there's a good story there as well.
Okay, I'm changing my password from JBT1234.
It's not password 123?
Oh, no, that was my old one.
Oh, okay.
Wendy, thanks so much. Wendy Whitmore is Senior Vice President, Head of Unit 42 at Palo Alto Networks. In the studio, so she gets a gold start today. Right now, the S&P 500, 30 points lower. That's down 0.6%, 47.35 in the index. The Dow Jones Industrial Average, 70 points lower. That's down 0.2% right now, 37,291. And the Nasdaq 100 is 148 points lower. That is down 0.9%. You are listening and watching Bloomberg Markets. I'm John Tucker with Molly Smith. And that brings us to 12:18. Let's get an update on company news. And with that, here's Steve Rappaport.
John, operators of Boeing 737 MAX 9 have completed inspections on an initial batch of 40 planes. It's a key step to eventually end the grounding of the aircraft. Bloomberg's Karen Moscow reports.
The FAA will now review the findings from those 40 checks to determine whether the Boeing-drafted procedures are appropriate to return the fleet of 171 parked MAX 9s to service. The agency ordered the grounding after a MAX 9 operated by Alaska Airlines suddenly lost a fuselage section shortly after takeoff earlier this month. That sparked a crisis in confidence in Boeing's manufacturing processes and a flurry of investigations. Once the FAA approves an inspection and maintenance process, it'll be required on every one of the grounded jets prior to future operation. Karen Moscow, Bloomberg Radio.
Thanks, Karen. Tesla slashed Model Y prices in European markets. That's according to Investors Business Daily. Bloomberg's Ed Ludlow has more.
It's been an interesting 12 months because at times the market has viewed Tesla's ability to cut prices and open new pockets of demand, that lever, as a real positive, because operationally and on the bottom line, they are streaks ahead of the legacy OEMs and other EV makers. They have some wiggle room on the bottom line to do that, though the other side of the coin is that there is a debate about whether these price cuts as a need to open new pockets of demand are indicative that the demand has gone away.
Bloomberg's Ed Ludlow reporting shares of Tesla now down more than 2%. I'm Steve Rappaport, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. We have got losses right now for the Dow, the S&P, and NASDAQ as the selling continues. S&P down another 32 points today, lower by 0.7%. S&P now at 4733. We've got the Dow down 87, a decline there of 0.2%. The NASDAQ Composite Index down 142, a decline of 1%. Stocks join losses in risk assets as bond yields climbed on speculation the Fed will be in no rush to cut rates as the economy shows signs of resilience. 10-year at 4.10% with a 2-year that's yielding 4.36%. Gold down $23 the ounce, down 1.1%. And West Texas Intermediate crude down 0.5%, 72.04 for a barrel of WTI. Shares of Schwab are trading lower by 2.3%. Schwab tumbled after the brokerage reported declines in profit, new assets, and deposits as it navigated a tumultuous year of interest rate increases that dented the firm's balance sheet. Recapping, stocks are lower with the S&P now down 32 points, down by 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thanks, Charlie. Appreciate it. I'm John Tucker along with Molly Smith. We are in for Paul and Matt, and this is Bloomberg Markets. Goldman Sachs recently raised $650 million for investing in life sciences startups. Is this an area for you? Well, let's ask our next guest. Zoe Pendon is a partner at Ananda Impact Ventures. She's joining us from all these guests in locations like I want to be.
Very true.
You go to Antarctica, then Mexico.
I'm telling you, the bachelorette parties are killer. But Zoe Pendon joining us from Spain today.
Nice.
Buenas tardes, Zoe. What's up?
I'm doing well here, thank you. Very warm.
So let's ask you on the risk spectrum, where do startups in health, nature, and biotech, where do they lie?
Risk. So at Ananda, we invest in very early stage impact ventures across all those areas. And it is, we are very early stage, so it is high risk. I mean, that's venture capital for you.
How much is...
But high reward if you get a home run on one of these. How many home runs do you get typically?
So in VC, you're looking in a portfolio of 25 to 30, maybe 2 max.
Oof.
But that's the name of the game. And everybody who works in this industry knows that. It's
So it's a numbers game.
Yes.
That's right. Well, I mean, tell us about some of the home runs you've had and like to what extent you can tell us about them.
So some of the areas that we've been investing in terms of the life sciences that you were asking about, we've got a company called Closed Loop Medicine, and this one deals with dosage. So when you take a pill, everybody's taking the same dosage. It's an adult dosage and a child dosage, but we're not all made of the same things. Our biology is very unique to each of us, and as a result, many of us get side effects. And, if you go back to how drugs were designed back in the 70s and 80s, there were not many women involved in those clinical trials. So many of the drugs that we take have much more exaggerated impact on female bodies too. So closed loop medicine works with pharmaceutical companies to do personalized digital dosage. So that's using artificial intelligence and tracking lots of data. So that's one of the ones. And then another one called Resistomap. It's a very recent investment that we've done. So very, very early. But, with the recent pandemic, everybody's become much more aware of the need for biosecurity and how pathogens can be used as a weapon, and it's quite worrying, really. And one of the next pandemic that nobody really talks about is antibiotic resistance. So what Resistomap does is it's able to map all the different strains and say where all over the world where you've got the worst antibiotic resistance and make people aware of this.
Yeah, we especially with my kids, it's like every time they went to the doctors, they get amoxicillin or some antibiotic, and you had to start wondering about like the resistance levels and what the ultimate result of that is. Hey, as an average Joe, can I get in on the ground floor?
Can you get in the ground floor in impact investing or life sciences?
Well, any of the companies that you're talking about. This is like, I want to get rich too.
It's incredible. Yeah, I'm sure. Don't we all? But no, it's important, not just getting rich, it's about having impact as well, and making things a better place, better healthcare for everybody, more accessible, and better lives for everyone. That's what impact investing is all about.
Got to think that there's got to be some kind of AI application here. So tell us a little bit how that's coming into your space and if that's something
the intersection of AI and life sciences, et cetera.
I don't know. It seems right.
That's like got my attention.
All right. Well, all right. Well, John wants to know about it. So tell John what's going on there.
Okay, so I mean, we've just seen this money all going from Goldman Sachs, and I must say it's not the only big fund that they've got. They've also got a climate fund as well. So Goldman Sachs are making some interesting moves just generally, not just in the life sciences. But we've seen lots of people go into the life sciences 20 years ago, similarly as they did with clean tech, and get quite bruised. So the question is, why are we seeing this again? That's where the AI comes in, making it cheaper, quicker to build models using existing data and synthetic data. And then your previous person that you had in the studio talking about compute power too. So in relevance to life sciences, you've got the ability to build new biological and chemical models as well, having this extra compute power. But what's also interesting, and I think this is where Goldman Sachs are picking up, is there's market forces as well. We're seeing this trickle-down effect from the big tech players, those magnificent 7 that we're calling them now, investing heavily into this space. So you've got 6 out of those 7 from the magnificent 7 investing in healthcare and AI and life sciences. Just to give you one example, which I'm sure people are hearing about on the news. So Google DeepMind spin out Isomorphic Labs. So they're reducing the time for drug discovery, signed 2 large deals worth nearly $3 billion with Eli Lilly and Novartis. So that's really interesting revenue apparently coming in quite early on, which we didn't see with that first trend 20 years ago in the early 2000s. They were mostly developing single assets, single drugs. So if it doesn't work out, you spend an awful lot of money at the beginning stage to then lose a lot. So extremely high risk. So what we're seeing is we're reducing that risk by being able to discover more potential drugs using artificial intelligence, increased data to reduce the risk at every single stage of a life science business. And I think that's why you're seeing now Goldman Sachs and many other people forging back into life sciences, which is a very, very impactful area. So the more money that goes into this and the more chances we have for success, this is a very good thing for everyone.
Zoe, do these companies come to you, or do you go scout these companies out? How does that work?
Oh, it's always a bit of both, actually. What we like to do at Anand is we have certain mega trends that we go for. So we've got certain fields in different areas of impact that we feel are the hot areas over the next 5 to 10 years. And for instance, we've started to focus a lot of time now into tech bio companies. So this does come under life sciences, and it's one particular area which is more about computational biology. So using AI with biology. It's the less capital intensive end of the life sciences, just let's say that. And that's where we're expanding our field, and we will often go out and look to the universities, work with the angel investors who have a background in this area, and go out and find as much as we do, they come to us. So it's pretty much a half and half sourcing strategy.
So Zoe, you started out by telling us that, for every 25 or so strikes, maybe 2 or 3 of them hit. So it's obviously a lot of them that don't work out. I know we don't like to harp on our, misfortunes, but can you tell us about maybe some of these that haven't worked out for you guys?
Difficult to name names right now, but what will tend to happen is it's kind of, if they've gone for a single asset strategy, if you're talking about life sciences, you spend a lot of money up front. And if that one doesn't turn out to have the product market fit, so people are not willing to pay at that point, but you've had to spend a lot of money and you run out of money. It's as simple as that with the life sciences. So that's why many of them haven't worked out in the past. But like I was saying, with everything that's happening now, you get more bites at the cherry with artificial intelligence in these companies. So it's reducing that risk and being able to spot what's not going to make it. Just saying, time is the most precious thing for these entrepreneurs as well as investors. If it's not going to work out, let them go again. Let them build on the failures of that one, because all science is built on on the shoulders of many of those that have gone before. Let them roll again into another one. So failure is not the disaster as many see it would be painted. It's just the next stage.
Zoe, a pleasure to talk to you. Appreciate you stopping by.
Thank
Zoe
you.
Bedden, partner at Ananda Impact Ventures, joining us from, I'm so jealous, Spain. Investing in life sciences startups. What was the figure of for every 20? There were like 3 home runs, maybe?
That's on homeowners? What'd you say?
Home runs.
Home runs, sorry. Okay, yeah, home runs, my bad. Sorry, it's been a long day. It's my first day back to work in a while.
I know. You're still in vacation mode.
I'm back. Don't worry, everybody.
Let's do a market reset. S&P 500. Am I too hard on you? 35 points lower. That's down 0.75%. 4730 on the index. The Dow down 103 points, and the Nasdaq 100 right now is 169 points lower. This is Bloomberg Markets. And that brings us to 12:33 on Wall Street. Let's get an update on news from around the world. And for that, here's Dan Schwartzman.
Thanks, Molly and John. President Biden has made the decision to reclassify the Houthi militants as a specially designated global terrorist organization. In the final days of his administration, former President Trump had labeled the Houthis as a terrorist organization only to have Biden revoke the designation early in his term. The Houthis have been firing missiles and harassing commercial ships transiting the Red Sea as their way to protest Israel's invasion of the Gaza Strip. Operators of Boeing's 737 MAX 9 jets have completed inspections on an initial batch of 40 planes. It's a key step to eventually ending the grounding of the aircraft. Bloomberg's Karen Moscow has all the details.
The FAA will now review the findings from those 40 checks to determine whether the Boeing-drafted procedures are appropriate to return the fleet of 171 parked MAX 9s to service. The agency ordered the grounding after a MAX 9 operated by Alaska Airlines suddenly lost a fuselage section shortly after takeoff earlier this month. That sparked a crisis in confidence in Boeing's manufacturing processes and a flurry of investigations. Once the FAA approves an inspection and maintenance process, it'll be required fired on every one of the grounded jets prior to future operation. Karen Moscow, Bloomberg Radio.
Thanks, Karen. The super PAC supporting Ron DeSantis, Never Back Down, has begun a round of layoffs, although the number of those losing their jobs was unclear. The layoffs come despite DeSantis' campaign claiming they have a path forward. The group had spent heavily in Iowa, where DeSantis finished second by 30 percentage points to Donald Trump. The Wall Street Journal reports that cancer rates in the U.S. for many common cancers is on the rise. Now, it is a worrying sign, but there is some good news. It's that cancer deaths have dropped now by 1/3 since 1991. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, Russell 2000, all in the red, all moving lower right now, with the S&P currently down 35 points. That is a drop of 0.7%. Stocks joining losses in risk assets as bond yields climb on bets the Fed will be in no rush to cut rates as the economy shows signs of strength. The Dow down 112 points now, drop there of 0.3%. NASDAQ is down 1%, down 156 points. NASDAQ 100 index also down 1%, lower by 173 points. Russell 2000 index of small cap shares down 1.2%. 10-year at 4.09% with a 2-year that's now yielding 4.35%. Gold down again today, just above $2,000 the ounce at $2,005, down today by 1.1%. And a further retreat for West Texas Intermediate crude oil traded here in New York, down 1%, $71.70 for a barrel of WTI. So bottom line, lots of people now thinking that the Fed will not be in a rush to cut rates. Robert Schein is Chief Investment Officer at Blankenshine Wealth Management, and he was a guest earlier today right here on Bloomberg Markets.
If you look at the sort of trajectory of inflation through history, you get two humps of inflation, and the Fed can't pull down sort of the interest rate to reignite some of the inflationary pressures. They have to ensure that inflation is anchored before they go ahead. I mean, about 78% of the time, historically speaking, inflation comes in two waves. So, what the Fed basically has done now is that for 2024, it's not a no on rate hikes, it's a no for right now.
And you can hear more of the conversation with Robert Schein on the Tape podcast. You can download it wherever you get your podcasts. Home builder confidence is up, rising the most in almost a year. Lower loan rates boosted customer traffic and sales among home builders today. Mixed picture. Toll Brothers down 1.5%. KB Home lower by 0.8%. And Pulte Group, Pulte Home, lower now by 0.7%. Recapping stocks lower, S&P down 35, down 0.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thanks, Charlie. And you are listening to and watching Bloomberg Markets. I'm John Tucker, along with Molly Smith. We're in for Paul and Matt.
Indeed we are.
Hope springs eternal, Molly. As always, on the M&A front in 2024. Is 2024 the year for a rebound? Our next guest has some thoughts on that. Thomas Smale is CEO of FE International. Before we get to the deals, what do you guys do? What is the company all about?
So FE International, we focus on middle market tech M&A. So we work with buyers and sellers of companies up to generally 300 million in valuation. In total, we've closed over 1,500 transactions.
So you're in an advisory capacity?
Exactly, we're an advisor, yeah.
Okay. 2023 is a year I would imagine you want to forget. What's the outlook?
Yeah, so 2023, I think, finished on a reasonable high. So if we look at our deal volume, second half of 2023 versus second half of 2022, we're up 56%. So deals are still happening, particularly in the middle market, lower middle market. I think where a lot of people see deal volume has slowed down is really those much larger transactions. So there's much less of those $1 billion and above deals happening, but there's still activity lower down.
Yeah, and it sounds like this year, obviously, if interest rates are going to come down, that should probably help give a boost to the outlook this year, right?
Yeah, for sure. I think last year there was a lot of uncertainty about what was going to happen to interest rates, and they kept getting pushed upwards. So a lot of buyers were kind of sitting on the sidelines waiting to see what would happen. Now I think most analysts are predicting maybe 2 or 3 interest rate cuts this year. So buyers are definitely getting more active, particularly those who are using debt. But on the flip side, there's still $4 trillion of dry powder with private equity firms that they need to deploy, which is sitting there in cash. So there's still the ability to do deals even if they don't use debt.
How does it work? Do they come to you mostly, or you see the opportunity like, hey, this is something that might make sense in terms of M&A, and you approach those companies?
So generally they will come to us. We've been in business like 14 years now, so we get a lot of word of mouth. Founders will come directly to us wanting us to help sell their business. Maybe they're ready to move on. Maybe they've had an approach and they want someone to help advise them, and then we'll work through the process of reaching out to suitable buyers and negotiating from there.
How do they reach that decision? Give me a specific, like when they know it's time to do something.
Yeah, so for a lot of people, it's very much a personal decision. So like everyone has, I think in the entrepreneurial world, has their number. Their number might be 10 million, 50 million, 100 million, 200 million personally they want to walk away with. When they get to that level in terms of where they can sell their company, they might just decide to walk away then. Some people walk away when they have a change of personal circumstances. Maybe they've got kids going to college and they want to kind of spend more time with them, or maybe they want to spend less time with them, or they want to take time away from work. It can work in either directions. A lot of time founders just get an approach. So they get an approach from a buyer that gets them excited about the idea of selling, and they just want someone to help kind of work through the process with them. Other times, I think particularly in kind of the current world of tech, it moves so quickly. Founders will have new ideas. So they're like, well, I've got a new business idea. How about I sell my current company? I'm going to go work on this instead, and I'll get some liquidity in the meantime.
So you'd mentioned private equity. Are you working in transactions a lot, that in which case that is the buyer, or is this mostly one business acquiring another?
Yeah, so private equity probably makes up about 50% of the deals we work on. We work with a lot of public companies as well who are trying to make acquisitions at all levels. I think a lot of people think public companies only buy billion-dollar businesses, but the reality is if there's a strategic fit, they might look at a $5 million business, a $10 million business, $50 million market cap business. And then a lot of individuals and like very small funds. You might not necessarily call them private equity, but they're kind of successful individuals or partnerships who have raised a small amount of money to buy a business as well. Particularly in the US, that's a very active like demographic of buyer.
Okay, so looking forward to 2024, are there any particular sectors that you deal with that look better than others? Where is the deal activity in terms of that?
So I think that the big trend at the moment is anything related to AI. And I think the interesting thing about AI is, even if you don't necessarily understand it, every single business out there has a way they can improve with the use of AI. Lots of other like kind of sub-industries that have come up over the years have not necessarily had that kind of ability to be applied in literally every business. So lots of companies we're working with or acquirers that come to us and say, hey, we're looking to buy a business that are interested in AI, either to augment what they already have. So maybe they can add some tools or even like a team to their existing kind of business or whatever they might have. So you can augment that by adding AI. Or maybe if you're building a business in the AI space, it's a great time to sell because it's such a hot market. So at the moment we have a 9-figure transaction we're representing. They've built a business in 3 years to over 20 million in revenue, no outside funding, currently actively looking for a buyer. And it's so far extremely interesting with buyers just because of the amount of kind of AI focus it has.
Last one here for you, Thomas. We've been talking a bit about earlier in the show about the regulatory outlook for M&A, especially with the JetBlue and Spirit deal that didn't come through. So tell us a little bit about that from your perspective, and especially if we're heading into an election year and maybe that administration could change.
Yeah, so I think buyers are always aware of political changes, and that's not just necessarily in the US, that's geopolitically. There's things all over the world that could affect deals. So from that perspective, buyers will always be thinking about it. Regulatory risk is very much specific to the industry you might be working within. So recently we worked on a business in the CBD space, which we successfully sold, but there's constant regulatory changes with CBD. So if you're an acquirer looking to buy businesses in that space, either you're going to be extremely confident and knowledgeable of that industry, or you're going to do a lot of extra research into what might necessarily change or what could potentially change in future. Or maybe you'll even risk adjust your offer and say, well, there's regulatory risk in this market, we're going to pay less for that business.
Thomas, a pleasure. And thanks for stopping by. An in-studio guest, a gold star for Thomas Smale, CEO of FE International, advising on M&A. And as we look at markets right now, let's get a reset. S&P 500, 34 points lower. That's down about 0.75%, 47.31 on the index, Molly. And the Dow Jones Industrial Average, 102 points lower. The NASDAQ 100 right now, down 172 points. That is a decline of 1%. You're listening to and watching Bloomberg Markets. I'm John Tucker, along with Molly Smith. And that brings us to 12:50 on Wall Street. Let's get a look at company news now. And for that, here's Steve Rappaport.
John, retail sales posted the largest increase in 3 months in December, capping a solid holiday season. Bloomberg's Vinny Del Giudice reports.
Gains were across the board, including online sales as well as general merchandise stores. Auto sales also advanced. Research firm Capital Economics says there's no sign Americans are buckling, even with high interest rates, even with dwindling sales. Meantime, December industrial production rose just 0.1%, closing out a lackluster annual performance for U.S. manufacturers. Vinny Del Giudice, Bloomberg Radio.
Diamond Sports Group lives to see another play. More from Bloomberg's Dan Schwartzman.
Local sports broadcaster Diamond Sports Group has been saved from liquidation after reaching a restructuring deal with most of its debt holders and Amazon. The deal, which is subject to bankruptcy court approval, calls for Diamond to emerge from Chapter 11 proceedings with Amazon's Prime Video platform as its main streaming partner. Key creditors have agreed to swap their holdings for stock in Diamond and will also invest new money while Amazon agrees to take a minority stake in the company. Diamond Sports Group, a unit of Sinclair, once held the broadcast rights to around 40 teams in the NBA, NHL, and Major League Baseball.
Bloomberg's Dan Schwartzman reporting. Traders are skeptical that the Alaska Air Group's proposed acquisition of Hawaiian Holdings will go through. That's after a judge blocked the merger between JetBlue and Spirit Airlines. The Justice Department argued the JetBlue-Spirit deal would stifle competition and drive up fares. JetBlue argued the alliance was vital to compete effectively against bigger carriers like Delta, Southwest, United, and American. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
You're listening to Bloomberg Markets on Bloomberg Radio.
All right, let's get a look at world and national news. And with the update, here's Dan Schwartzman.
And thanks, Molly and John. Boeing has moved one step closer to ungrounding its 737 MAX 9 jets as operators of the plane have completed inspections on an initial batch of 40 jets. The Federal Aviation Authority will next review the findings of the inspections to determine whether the Boeing drafted procedures are enough to return the 171 parked MAX 9s back to service. The grounding of the planes was ordered after the Alaska Airlines incident on January 5th, where a piece of the fuselage flew off after takeoff. The possibility of former President Trump winning the presidential election has been a hot topic in Davos, with concerns that his return to the White House could stymie climate progress. However, U.S. climate envoy John Kerry tells Bloomberg the shift to greener alternatives will continue thanks to, among other things, policies that are already in place and lower prices for renewable energy.
I'm going to stay at this, and there are so many different ways to continue to be able to be engaged in this. So unfortunately, you're stuck. You'll see me at the COP. You'll see me. Can't get rid of me yet.
Kerry speaking to Bloomberg from the World Economic Forum. He is stepping down after 3 years from his role. Cabinet members in the Biden administration are set to meet their Mexican counterparts on Friday for meetings focused on the number of migrants crossing the southern border. The visit is a follow-up to when U.S. officials visited Mexico at the end of December. During that trip, both countries agreed to work towards reducing the record number of crossings to a level that is manageable. The issue of border security has risen to the forefront of the upcoming presidential election, as well as a sticking point in President Biden's funding requests, including much-needed aid to Ukraine. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg. Molly and John, back to you.
All right, Dan, thanks very much. And that brings us to 12:57. Guess what, Molly?
Tell me.
Bloomberg Sound On is coming up in just a few minutes.
That's
and
right.
He's not in Washington. He's not in Iowa. He's not in New Hampshire. He's actually in studio. Joe Matthew, the host of Bloomberg Sound On.
A really big gold star.
Are
for
you
Joe
recovered?
today.
Even though we didn't plan it this way. I've been trying to get home for 2 days. I still cannot, and so I am here. You can always get to New York, it seems.
This is kind of like home.
Oh, my God. Well, yes, but we've been doing John Candy and Steve Martin for the last 2 days. I tried to fly. I couldn't do it. I got here. I tried. I thought this morning, the comfort we could take in an old-fashioned train. After the airline meltdown for 2 days, I got all the way. I'm on the train at Penn Station. Frozen switches. Everything got canceled, and so I came back here.
That's bad news.
But in the end, I really just wanted to see you two.
Okay,
It's good news for us.
What,
Well, that's nice of you to say.
What
Are
I
you
learned...
tan? Did you just get back from the Caribbean?
I was going to say, I had no problems flying
Where
back
have
from-
you been?
She's been in Antarctica.
Really?
From Antarctica, she went to Mexico.
Well, that's not
Well, that was a good
directly
move.
true. I was here for a week, and then I went to
Is that an
Mexico.
Arctic tan?
It's a Mexican tan.
Okay, fine.
Yes.
So you were on the beach.
I was, and now I'm back.
I'm
I
sorry,
flew back
I wouldn't be
yesterday.
bitter about that at any other time.
All right, on the political front,
Yeah.
here's from my perspective, what I learned is that Trump supporters would walk on broken glass.
That's right.
To get to the
In
polls
this case,
to
a lot
vote
of
for him.
sharp ice. The idea, I mean, we were afraid to leave the building most of the time we were there. You think it's cold in New York right now. It was like 20 below zero without the wind chill in Iowa. They couldn't even heat the hotel. We had coats on, in the studio. And we thought, wow, this is going to kill turnout. And a lot of folks said that might hurt Donald Trump's chances because Ron DeSantis had the big ground machine. They were wrong. It was benefit Trump as they walked through ice over broken glass, as you say, for their man. And it was a
Okay,
blowout.
New Hampshire probably not as cold, but is Nikki Haley, I mean, what's her path forward?
Yeah, it's going to be a different contest. Nikki Haley is doing really well. In fact, we're going to talk to Emerson College polling that has them a lot closer than you saw in Iowa. The problem is there may not be a path for her out of New Hampshire, and that's the question. If she does really well, could that add to her momentum going into South Carolina? There are a lot of skeptics today who think that Donald Trump already has this in the bag.
Yeah.
All right.
All right.
We
Well,
only have 30 seconds left, but I was actually all set to talk to you and do travelogue, your trip to Antarctica.
Well, I'm glad I brought that up.
Which on some fronts is actually more fascinating.
I think
that's
we-
no slight against you.
no, we really hit
Let's
it
do
all.
a show on it. I'm trying to get Molly on this damn program.
I will come
Molly
on.
Smith and John Tucker with you. We're in for Matt and Paul. Bloomberg Sound On, that starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from DC's top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Meeting of the minds in the Oval Office. Someone call a therapist. Welcome to the fastest show in politics. As President Biden summons Speaker Mike Johnson and congressional leaders, including Chuck Schumer, to the White House today to talk about a deal on the border, funding for Ukraine. Controversial stuff, even as Congress works to avoid a government shutdown starting on Friday. There's new polling. It shows Donald Trump poised to win another. We'll look at the data and talk with Emerson College pollster Spencer Kimball today about what to expect in the first in the nation primary with less than a week to go now. Analysis from our signature panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour, and it's all after a look at Wall Street. Let's get that going right now. An update on trading with me in New York is Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Joe Matthew. We love having you in New York. Let's hope you get back safely. Chill on Wall Street today. It continues bear weather, and they are growling again today, right to the numbers. Red on the screen with the S&P down 32, drop there of 0.7%. Dow Industrials down 95, a decline of 0.2%. The NASDAQ Composite Index down 138 right now. That is a drop of just about 0.9%. Stocks join losses in risk assets as bond yields climbed on bets that the Fed's going to be in no rush to cut rates as the economy shows signs of strength. We saw that in the retail sales report this morning, hotter than expected. 10-year right now at 4.09%. We have got the 2-year right now at 4.35%. Spot gold is down $22 the ounce, drop there of 1.1%, 2006 the ounce, while West Texas Intermediate crude down 1.1%, 71.58 for a barrel of WTI. So it is a down day for the U.S. equity market. Matt Brill is Senior Portfolio Manager at Invesco, and he says what matters is the bigger picture for rate cuts.
Whether they cut in March, April, or March or May, it doesn't matter so much, but the path is coming. And we think it's going to happen because the data is going to be there. It's not because the economy is going to fall apart, but because the deflationary forces continue to be prevalent, and that's going to continue to flow through. So the Fed's going to talk it down all they want, but month after month, you're going to continue to see that inflation get more to their normalized levels.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. The government has unveiled a long-awaited regulation that could slash the biggest banks' overdraft fee income by as much as $3.5 billion a year. Bank stocks are low right now. Case in point, JP Morgan Chase down 0.4%, Citigroup down 1.1%. We've got Bank of America shares also declining today, down by 1.1%. Wells Fargo down by 0.4%. Recapping, stocks lower, S&P down 31, drop there of 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thank you. Good to see you. Welcome to the Wednesday edition of Bloomberg Sound On as we join you live from World Headquarters in New York. I am caught somewhere between the amazing race and escape from New York as I am still trying to get home from Iowa. But hey, if you can't be in D.C., you may as well be here. So we welcome you on the radio, on the satellite, and on YouTube. Search Bloomberg Global News if you want to find us here in the studio. We've got a great conversation ahead for you this hour, including a pollster from Emerson College and our signature panel as we read tea leaves coming out of Iowa and look at new polling in New Hampshire. I will give you just one note. We are looking at a couple things today, including an important meeting at the White House, going to start a little more than 2 hours from now. And this is Joe Biden, Speaker Johnson, Chuck Schumer, National Security Committee chairs, talking about the big request for funding in Ukraine, a deal on the border. This could be a very newsy day here because we are cruising for a potential government shutdown that could start as soon as Friday. That's going to be the backdrop for the conversation. And guess what? Shocker, no one's getting along. As we head now to New Hampshire, less than a week off, and there are new numbers today. It's getting pretty noisy. You know, we talked to David Paleologos last week from Suffolk University, and they're out with new numbers this morning. They are not tied, as we talked yesterday. Donald Trump gets 50% in this poll, Nikki Haley 34%. Ron DeSantis has all of 5% in New Hampshire. So it is looking like a two-way race in the Granite State, but also a runaway win potentially once again for Donald Trump. And the question is, what will happen if there is a gap like that, knowing that expectations are very high for Nikki Haley? Remember this ARG poll yesterday? ARG has Trump 40, Haley 40. That's a pretty different story than what we have here in what is a survey of 500 likely Republican primary voters. Jan 15, Jan 16, the day and day after the Iowa caucuses. So you wonder if these numbers are moving based on that commanding win that we saw from Donald Trump, that race that was called so early. I'll back up a little bit further here to Emerson College's most recent poll, which is interesting because this brings you back to the 11th, and it was a bit of a different picture, which is why we wanted to talk about this with the polling director at Emerson, Spencer Kimball. He's with us right now. Spencer, it's great to see you, and we welcome you. Has the landscape shifted in New Hampshire since Iowa?
Well, we're going to see that over the next couple of days. But at this time, it looks like Trump still holds a double-digit lead, and Haley is the alternative. DeSantis is where he was before Iowa, so it doesn't look like that second-place finish out there really gave him much of a bump yet at this time.
Wow, that's something else. Are expectations too high for Nikki Haley to be able to call this a win? The idea was if she struck within single digits, maybe even won this thing, that she'd be having new momentum that could carry her into South Carolina to make a difference, but it's feeling less like that, isn't it?
It sure is. I think the big win she needed was out in Iowa to get that second place show. She didn't get there, came up a little bit short, and now she's in New Hampshire. And I think she's got to win New Hampshire in order to really become a player to win the nomination. Because if you look forward, as you mentioned, South Carolina's at the end of February, where she's trailing by 20, 25 points, but that is her home state. So maybe she can rally some support at the last minute. But then you got to go to Texas and California for Super Tuesday, and she's trailing out there by over 50 points against Trump. So even if she was able to get over a couple of these hurdles, there's a big wall coming on Super Tuesday that she's going to have to get through.
I mentioned your last poll of January 11. That had Donald Trump at 44% in New Hampshire, followed by Haley at 28, who was up 10 points since November. Do you think that momentum is gone then?
Yeah, it has slowed. So we've seen Trump's numbers drop over the course of the year, basically. He was up in the 60s, then down in the 50s. Now we have him in the mid-40s going into Iowa. If you look at that Suffolk poll today, it looks like he actually gets a bump out of Iowa. Their previous poll had him at 46. We had him at 44. Now they have him at 50. So I would presume our numbers would go up. I think the biggest difference, though, is the two candidates that have dropped out since our poll. You have Chris Christie, who is more in the Haley lane, where those voters would split in that direction. But then you had Ramaswamy, who was actually beating DeSantis at that point when he's dropped out. And those votes are probably going to line up more with Trump. So there looks like there's some room for Haley to gain a little ground between those two. But based on what Suffolk put out today and what we've been seeing, she's got definitely a lot of room to make up.
Pretty amazing as we spend time with Spencer Kimball, who runs polling at Emerson College, my alma mater, if I'm supposed to disclose that. Spencer, Nikki Haley says she's not going to debate again unless Donald Trump shows up. And ABC News and WMUR, an important station in New Hampshire, have canceled their debate ahead of the primaries. And I don't think Donald Trump's about to show up. Ron DeSantis said he'd be happy to debate two empty chairs, and I guess he's not going to have that opportunity. Is this important? Does it matter anymore? Has Donald Trump taught us that debates don't matter?
Well, I hope not. I think they do matter, and I think it was a mistake for Haley to drop out of this debate.
How come?
If you look at these numbers where she's trailing, she needs a bit of a game changer. And for her to be able to go on stage with DeSantis, even though he's in single digits out here, it would still give her some sort of platform to be able to make the case to the New Hampshire voter that might get people to focus in. Now, granted, their debate before Iowa had lower ratings than expected, so maybe that goes into the equation. But without a debate or some focusing event, it's hard to imagine what's going to, change the momentum. If she had come out of Iowa in second place, I think that's a different story. But without that second place win, where does that momentum? Start pushing her in the back as opposed to blowing in her face at this time.
Well, Spencer, a lot of eyes were rolling when they heard from both Nikki Haley and Ron DeSantis the night of the Iowa caucus. I'm sure you saw these speeches. Ron DeSantis with the rock and roll. He's got AC/DC playing, Eye of the Tiger. He says, we punched our ticket. Coming out of Iowa, people went crazy. Nikki Haley said that this is now a one-on-one race, a two-candidate race between her and Donald Trump because she won one of 99 counties in Iowa. Do both of them need a reality check, or are they about to get one in New Hampshire?
Well, certainly, I think Governor DeSantis is going to get a reality check if he comes in single digits in New Hampshire. Plus, you know, he's got a fight in South Carolina next. He doesn't have Florida coming up. That might be a firewall, though he, in the polling, is trailing in Florida by 30 points to the former president. So I was surprised by those. I thought it was an opportunity for DeSantis to kind of take the high road, come in second, above expectations, and walk off the stage at that time, because look what's coming ahead of him. In New Hampshire or South Carolina. Haley, on the other hand, I think had already a pre-planned speech for her performance in Iowa and should have pivoted a little bit based on the results. But without that, she's now looking at this as, at least in New Hampshire and probably South Carolina, it is a two-person race, but she's trailing by 15 points, which in politics, as we know, is a considerable margin to make up.
Well, what do you make of the whole last-minute thing in New Hampshire, not to mention the unpredictable nature of 40% independents showing up, coming from different corners of the state? Can create some noise here. Obviously, there's almost a week left of campaigning, more town halls, more door knocking. Do you think that these numbers could move?
Yeah, I think that there is the window is slightly cracked for Nikki Haley if you look at the road ahead. But it's a crack. You know, Donald Trump is walking through a garage door at this point for the nomination. Lots of space for him to make up and to continue to grow his delegate count. So at some point, you don't want it to boomerang on Haley, who's run a really well primary. Remember, she was in single digits. She's picked up 24 points in New Hampshire in the last 7-8 months. So you can see that she has run a good campaign. But if she stays in it too long, she might upset the base of the party and could hurt her chances if she was to run again in 28.
Fascinating stuff here. All the while, Donald Trump may be going through a garage door. I think that's what you said. It was a courtroom door yesterday, and he's going to be back today. Jury selection in the case of E. Jean Carroll. Not, I think, what you would describe as a positive story for any candidate. Yet he continues to spend a majority of his time in courtrooms as opposed to early states, and his numbers keep rising. Should Nikki Haley and Ron DeSantis try to get indicted at this point, Spencer?
Well, that's generally not the traditional ways candidates try to get attention. But in this day and age, things that were up are down, and, you know, backwards is forward. So, no, I wouldn't encourage that type of behavior. I think that they kind of need to be looking more big picture and think about maybe it's not 24 is their year, maybe 2028 is their year, when we know that most likely it's an open seat. And so while you want to get things lined up right now and to win now, there is that big picture to consider for both of them.
Glad we got some time together. Spencer Kimball, you going to be in New Hampshire when we're there next week? Or are you running numbers from Boston?
No, they sent me up to Manchester. I was out in Iowa as well. It was cold.
Oh, come on.
I got out.
How the heck did you get home? I'm still trying to get home.
I flew out of Chicago at 7 in the morning.
All right, so we understand each other. All right, let's meet up in Manchester. Let's have you come on from the primary, and I look forward to seeing you there, Spencer.
That's great. We'll see you, and we'll have a new poll at the end of the week.
When is that, on Friday?
Sunday, we usually
All right,
release.
Perfect. Keep us posted. I look forward to it.
Got it.
We'll have late numbers
Thank
from
you.
Spencer Kimball. Thank you, sir. Emerson College polling director with us here on Bloomberg Sound On. As we assemble the panel, they made it home. Rick Davis and Jeannie Shanzano, fresh off the Iowa caucuses and on your radio and on YouTube with us now, our Bloomberg Politics signature panel. And boy, this is interesting here, Jeannie. I'm not sure your thoughts on these new polls, but it looks like Nikki Haley may have peaked in New Hampshire. Is that how you're reading it?
Yeah, first of all, Joe Matthew, it is great to see you, and I hope you make it home. You have been killing it out there trying to get home. It's like planes, trains, and automobiles.
It is. I'm looking for John Candy. I haven't found him yet, but you just got home yourself, so I think you know what we're going through here.
Just got home and warmed up. You know, I think this thing does seem to be, Donald Trump did get a bump out of Iowa as we look at New Hampshire, but I would just preface all of this by saying New Hampshire, as I am sure all of our pollsters can tell us, is notoriously hard to pull. And so that is one caveat I would put to looking at all these numbers. Just look at the Senate race in 2022. They had enormous challenges. They were off by 8 to 12 points. Tough place to poll. Putting that aside, I do think that both Trump and Nikki Haley are getting something of a bump out of it. But in my mind, as we look at New Hampshire overall, I can see this as a case where winning for Nikki Haley is actually losing if she wins on the backs of independents. And that's the thing I think we have to keep in mind, because Donald Trump will come right back and he will make hay out of that and make her into the poster child of the never Trumpers. And that is a losing strategy for her.
Well, it's interesting, Rick Davis, because I think we can argue that John McCain made his way to the nomination on the backs of independents, but we're in a different world now, aren't we?
Yeah, the party's a little different. I mean, it's a little more polarization. It gets worse every year. But I would say, I mean, you know, if Donald Trump would be willing to give up all the independents that are voting for him, and in the recent ARG poll, it shows, let me see, as many as 24% of his base going in there on his vote is independent. So now Haley appeals to 51%. So he's losing badly in that category. But I'm not sure he's going to take a quarter of his vote and say, go away. So I think people have to be a little cautious about complaining about independence in New Hampshire. And we do know that South Carolina allows, it's an open primary state, allows independents to vote there. And, you know, I'm sure Haley's like, go ahead, you know, throw that punch, piss off all those independents in South Carolina before we get there. So it's not as easy as what he was able to make it out to be in Iowa, because really it's a much more conservative state than any of them that they're going to play in between now and Super Tuesday.
Jeannie, the Haley Super PAC SFA Fund, catchy, is up with a new anti-Trump ad campaign. They're framing him as a bully and a liar. The line is, Trump is lying about Nikki. That's what bullies do. Is that the right message for the closing week?
Yeah, I think it's the right message. They've got to get the independents out to vote. And when you compare to Iowa, 16% of those Iowa caucus goers saw themselves as independent. It's close to half in a New Hampshire primary where Democrats aren't playing. So she's got to make that case. And I think she could have a very good night in New Hampshire, potentially, on the backs of that kind of spending, that kind of organization, and that kind of argument.
All the while, Donald Trump in court and poised to win another. We'll see. We're not making predictions here, but the polls out today would suggest that this could be an interesting contest in New Hampshire, and we'll have a lot more on this with Rick Davis and Jeannie Shanzano as we also follow what's happening in Washington, potentially a breakthrough today on the border. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pelletan. We begin with a developing story right off the Bloomberg Professional Service. Germany's Bayer says it will change its operating model, and it sees significant staff cuts, says it cannot quantify the scope of those cuts at this time. Bayer operates in 3 reportable segments: crop science, pharmaceuticals, and consumer health. Right now, we've got Bayer shares. The ADR is traded here in the U.S. down by about 0.1%. It is a down day for the U.S. stock market. The Dow, the S&P, NASDAQ, all in the red, and joining losses in risk assets as bond yields climb on bets that the Fed will be in no rush to cut rates as the economy shows signs of strength. So here's where we stand midday. We have got the S&P down 43, drop there of 0.9%. Dow Industrials down 154, drop there of 0.4%. NASDAQ, the composite index, down 174, a drop of 1.2%. The NASDAQ 100 index also down 1.2%. 10-year yield 4.11% with a 2-year that's yielding 4.39%. Spot gold now down $25 the ounce at $2,002. That is a drop of 1.3%. West Texas Intermediate crude down 0.6%, 71.97 for barrel.